Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live in studio. Our senior economist, Tracy Shuchart, otherwise known as Shy Girl. Good morning, Tracy.
Good morning.
And of course, sitting there looking as chill as can be, our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, folks.
And good morning, chat. Hopefully you guys are all feeling really good this morning. Not a ton to talk about today.
Well, we've got a few interesting things going on. I found that was interesting. You have Nomura just purchased Macquarie Group, their investment division. And basically, it's a bet on the U.S. rebound. It's a $1.8 million deal. 90% of those assets are in the U.S., and Wilcox, who is the head of this, he basically said, a lot of people have lost money betting against the U.S. markets in the past 30 to 50 years. And while the latest volatility is likely to persist, over time, the market will find equilibrium. I am not bearish about the market in the U.S.
Look, the market always finds a way. I always think about Jeff Goldblum in Jurassic Park, when he talks about the dinosaurs and he talks about how life always finds a way, right? I don't know why that sticks with me. And you think about it, and it's obviously true in life. But when you look at markets, they always find a way to go up. I think that this right now, I know we talk a lot about kind of the negativity that has come off of what's happened with these tariffs. And I think, for a lot of us, we believe that these will be good down the road. I mean, I know I believe that. I think that down the road, this will be good for the United States. I just think that initially, the way this is being handled, there's a difference, right? That I don't think that the markets can fully digest this much change this quickly. And I think that's the biggest issue. I think communication has been a little sketch at times. Look, we talked about this, how committed we are to the tariffs and the 90-day pause, which I still think to this day was obviously market enforced. But we are where we are, and I do think that over the long term, look, you got smart people at NVIDIA, Meta, Apple. You don't think they're going to figure out how to make money? Come on, man.
Well, of course, right? Absolutely. And then on the other positive note, we have J.D. Vance, our vice president, is in India right now, trying to work on a trade deal. So we'll see if anything comes of that or not.
Yeah. Well, it could get some good news. I also heard this morning, Shai, is there any news coming out of Kyiv about, Ukraine? I don't think that would be a huge market mover for maybe indexes if this starts to stall. I think the war's been going on for so long, but I think the human side of things could be a good thing, and who knows what markets react to it, maybe oil or something.
Yeah, absolutely. I mean, everybody's still watching. The United States did say the other day, if we can't come to a resolution soon, they're going to kind of back off this deal, but seems like Russia is willing to talk, and so that's always something to keep in the back of your mind, and that would definitely affect commodity markets.
Yeah, definitely, and we'll keep an eye on that, and we'll watch that with Hot Commodities. It starts off now every afternoon at 2:30. I love that show yesterday with you and Jimmy. I love that show in general. Always gives me insight into other markets. Speaking of which, Cags, overnight, what's sticking out at you?
I'm really surprised at the volume in the E-mini S&P as an example being kind of normal, maybe even down a little bit from average, given the fact that yesterday was a low volume day, probably not a lot of institutional involvement, folks taking a long weekend. So I thought today we'd have more of a more participation, more volume, and a bigger boost up in equity prices. We didn't see that. I mean, we're only up about 0.76% in the E-mini S&P as we speak on 155,000 volume, and that kind of carries through all of the equity markets and actually all of the markets that I'm looking at right now. And, that 10-year yield is still uncomfortably close to that 4.4% when I look at the CME Group's micro yield. So treasuries are kind of stuck sideways, at least the mid part of that curve, with not a lot of movement. So I am surprised we're not seeing more stuff. Gold, on the other hand, just off the hook. I mean, we made new highs last night in gold. There doesn't seem to be anything stopping this market.
No, gold up again, 1.25, 1.33%. Bitcoin up 1.5%. ETH up almost 4%. You know, those trades are working right now. Macro backdrop with strong technicals. Anytime technicals are working with the macro backdrop, you know, especially in commodities, especially in futures markets, right? Those trades run so much further than people think they can. And gold is one of those things where we joke about it this morning. I said, maybe I'm going to take a short in gold. Obviously, I was kind of kidding with you. I said, yeah, because I like pain. But ultimately, you know, it's not too hard to see these trends, right? I mean, they're right in front of us. But the problem is a lot of times the trader and us, all of us, either want to fade them or you want to, you know, you're looking for the quick buck against the train instead of just hopping on the train for the ride. And right now, gold is saying, get out of my way, you know, look out.
Right, exactly. I mean, you know, for, you know, the last few months, we've, you know, the pullbacks we have had have been really shallow. And so, you know, this is, again, I keep saying it, it's not a market you want to fade right now. And I know people are itching to do so, but this market is nonstop. And we'll have Bob Coleman on later this morning, or in a few minutes, to talk about the precious metals market. So that'll be fascinating.
Quick background on Bob.
So, yeah, so he is the founder of Profit Plus Capital Management, which has a gold and silver fund that's vested 99% in precious metals. And he also is the founder of Idaho Armored Vaults, which is transportation and storage and purchases of precious metals. So yeah. The guy knows his precious metals for sure.
Yeah, I just followed him today on Twitter. We'll put that link in chat as well. I didn't know of Bob until Tracy mentioned him, but I'm looking forward to speaking with him. Back to you, Jimmy. You know, when we talk about this rally in gold, just kind of curious. I know yesterday you showed some like Fibonacci extensions. When a market gets really parabolic like this and we start getting 1, 2, 3, however many standard deviations the way it is, I saw another thing yesterday where it was like a huge percentage above like its 200-day moving average. What's the mindset for technicals, and what are some tools that you're looking at when a market gets that parabolic?
Yeah, it's very difficult. I mean, when you see nothing but blue sky above a chart and we're making all-time highs and things just keep grinding away up, you know, how do you come up with areas of interest? How do you come up with potential targets? And so, you know, from a longer term point of view, I like to use fib extensions to kind of give me some targets on the upside if the chart allows it, which gold does. On an intraday, I mean, you have to go with those gamma levels, pivot levels, and some of the regular tools we see. But it's a little bit tough when you keep rallying and you keep going on, you know, looking for breakouts to the upside. So from a longer term point of view, I'm looking at those fib extensions. I know they're not ideal. They're not perfect, but I'm not the only person in the universe looking at these things, and it's given me a sense of possibility. And then those even numbers too, those psychological even numbers, right? So 3,500, 3,550, 3,600, those are also going to trigger some activity.
Yep. And that's what happens when a market starts moving that much. We talk about this with equities. Round numbers start coming into play because of the options market. You know, people are going to trade the most active strikes, which a lot of times are going to be right on those, you know, evens are 00. If you don't know, if anyone ever hears me say that, and then half is like our 50s. So, I think that Mentor Q is really probably one of the best tools you could use when a market's getting like this as your guide, because you could see what the options market is doing. And Jim explains that a lot every morning. And I know that he'll go over that probably when we go over his edge report. You know, a couple things I want to talk about to the traders out there is yesterday, you know, I got a few DMs on X, and of course, everybody, you know, if you ever have any questions for me, obviously put them in chat. You could send me DMs on X. I don't get to my DMs on X as often, but I have a free Discord if you want to check that out. And one of the things that people were asking me is just how I'm identifying the tape the way that I did yesterday, where I talked about where we grind in one direction, like we are right now in this bear market, how you see what the tape does when it gets really slow. And it's one of those things where this is where I always say you need experience, you need to watch these markets over time, and you start to develop. And I hate to use the word feel, but it really is. It's feel, it's intuition. You watch it over the years, and you see things happen over and over again. Markets, no matter how much change has come into this market, from me seeing it into the pit to when electronic trading first started, to HFTs coming in, to algos, to AI, it doesn't matter. It's still human behaviors. And if you look at equity markets right now, it's just the exact opposite of what you see in a gold market, right? And we go from a place where a lot of newer traders, especially during like the COVID times, really learned how to trade just the market that goes up. And when the market's doing nothing, the market would just grind higher. And now you look at a market like yesterday, no real news. I mean, no significant news. The Trump Powell thing is like, whatever. I mean, it's headline news, but he's playing his game. Powell's doing what he's doing. I don't think it's going to be something that happens. Now, if he were to remove him, that's a little bit different. I'd be curious to see what the market did there. But ultimately, I think when you look at the tape, when it's not having any significant news and it grinds lower, and you just see when it gets to support, a lot of you probably learned a lesson yesterday, or maybe you caught some trades. Either way is a learning lesson. When the market is a lot of times one way on a Monday, where it just grinds lower, put that in your memory bank. Remember that. I mean, I put that in my note, and I said it's probably going to be a one-way grind on a Monday, and it's just something you see over and over again. So again, it just solidifies what we all say here on the network. Time and experience will help you a lot become the best executor of your strategy. And so just wanted to kind of get over that, because I did get a few questions about that. Back to you, Shai. Bond market is kind of quiet. We also have earnings. Anything in the headlines we got to look for today? Maybe any data points or anything that could maybe stir this thing up a little bit?
Yeah, well, the data we have today is not really market moving. We have Philadelphia Fed non-manufacturing at 8:30, not market moving. And then you have Richmond Fed business conditions and manufacturing index at 10. Again, not really going to be market moving. So still another quiet day on data. That will all change tomorrow because we have PMI coming out.
Yeah. Jimmy, outside of, we really focus with you on metals, and maybe even talk about Bitcoin if you want, but outside of that, anything else popping out at you today? I even see energy's up quite a bit today.
So, I mean, the dollar, when I'm looking at the dollar's performance on the futures market versus the major currency pairs, it is a little stronger today, right? We've seen this U.S. dollar just plummet over recent weeks. Today is a little bit stronger, and if that holds, that could potentially be a trigger for some other markets to move as well. So I'm going to keep an eye on that. I mean, the British pound sterling is pretty much unchanged, but my favorite, the Swissy, dollar's pretty strong against the Swiss franc right now, relatively speaking. So I have my eyes on that currency market as we go. Yen is positive, so we'll keep an eye on that as well, but not by very much. It's almost unchanged. These aren't huge numbers, but it's bucking the trend a little bit.
Yeah, when we talk about, I was hoping you were going to go there with the Swissy, because that market made a decent move higher yesterday, took out some previous cluster range highs, and has come off a little bit today. So you are seeing some dollar weakness, Shy. Minimal. I mean, I think it's just a rotation probably in trend. I don't know what you think about it.
Yeah, I mean, positioning right now is uber short. So if we get any kind of sustained move higher in the dollar, we could see a squeeze higher just because of how the market is positioned. But that said, people are still really bearish on the market interest. We talked about the yen, because it's more of a safe haven trade,
Yep.
and the unwind did make a new move higher overnight, and it is coming back down a little bit, but still positive on the day.
I think what I take of the dollar move right now is that gold is up in spite of a stronger dollar today. Tells you really the strength of that trend, right? And you also have Bitcoin up again in spite of a weaker dollar, right? I mean, and I know yesterday we talked a little bit about gold and Bitcoin and how they're working together now, but you know what? I can't turn away from that right now. I think when those two are latched onto each other and working the way that they are and going up even on a day where the dollar is going up a little bit higher, it just shows the strength of those trends. Again, and I say this all the time, macro working with technicals, hard to fade those moves. You can't look for the quick buck against these trends. These trends are too strong. And again, they're the dominant trends right now. I mean, maybe not Bitcoin. I mean, Bitcoin, I think, is coming alive. I mean, it has not made a higher high, so there's a lot of work to do there. But ultimately, when you look at what's happening with gold, I still think that sends a signal all the way through to the equities markets that look at, this is the place that we're putting our money right now.
A little bit of risk off.
Yep. And you know what? And we're going to get to equities, of course, throughout the entire morning. I've got quite a bit to say about that, where I think we are with them. But, again, a lot of other things happening around us I think we have to keep our eye on. But we'll be back with Bob, and we're going to talk gold with him. But before that, let's get to this morning's Edge Report with our own Jimmy Cagnina.
All right, just starting off with the E-mini S&P chart, there's really not a lot on this chart to suggest bullishness. Stochastics crossing under in a bearish way. We have all the moving averages are sloping downward. We're trading below that big Hulk candle midpoint right now with the close below it. We haven't been able to penetrate above it. No major fib levels are in contention. So just kind of from a longer term point of view, this is a bearish looking peak. Getting into the intraday, we have about an 82 handle range high to low, which is way off the ATR. The ATR is about 185 right now. We have that high vol 0 DTE acting as resistance at the top. You see a couple peak candles up there, and that's at 52.50. On the downside, JAX1 is kind of forming a nice area of support on the bottom. So that's the good news, and that's 5,200. Nobody really should be surprised there. And there's another JAX number and a blind spot from MenthRQ, which are really awesome blind spots, 52.25. That's where we're trading at right this second. Volume profile is very immature right now, so we'll see if it fills out or not. But we do have a dominant point of control right at 52.33 half. Going to gold, the gold actually pulled back a little bit today after really once we got into that London initial balance open. It kind of sold off, tried to get back on its feet and couldn't, and so we sold off. Below that 1-day max, below this JAX level of 34.75, and right now we're kind of consolidated. At the bottom of the value area, approximately 34.45 is support right now. JAX2 on the downsides in play, 35.50, as well as previous sessions highs, which are way, way down here at 34.42. But we did kind of break through that 3,500 level, creating a new all-time high peak here. R2 acted as resistance up here, and these pivots are great. A lot of times when there's no other areas of interest to think about, 35.05 and a half is where that area of resistance is on the gold chart. So we'll see if this volume profile fills out a little bit better, because right now it's not that great. 10-year notes, relatively range bound, nice point of control in the middle here. We have a pivot pretty far away right now, so this would be an extreme move to the upside. Something's going to have to happen to get to 110, 29, 30 seconds. And then S1 at the bottom here is really kind of framing the support down here at 110, 16 half with a 0 DT put support just slightly below that level on the 10-year note. We're tracking about right now 4.405 on the micro yield, so a little bit of a cause for concern. Let's go over to crude oil in honor of Tracy right now. We're going to do that because I thought it was interesting that we had a 0 DTE call resistance in gamma wall, really acting as a really nice area of resistance all night long after the rally that we saw in the on the London Open, and we kind of retraced nicely back there, creating a nice point of control, approximately 63.24. And really, the Jack's 4 level and the pivot are really framing the bottom of the conversation for crude oil right now. And that's approximately 62.75, give or take. So again, we're kind of range bound here. There are upside targets as well. Jack's 5 is up here along with previous sessions highs, and R1s all clustered together around that 63.73 level. And that is today's Edge Report.
Well, thank you, Jimmy. And we now have Bob Coleman, Profits Plus Capital Management and Idaho Armored Vaults. Bob, I just followed you on Twitter. Shy talks a lot about you. Thank you so much for joining us this morning.
Sure. Thank you for having me on.
So I have to start out with the physical side. Yeah, we can hear you, Bob, loud and clear. You look great too, by the way. Great setup. So I want to start off with the physical side with you, of course, right? Because this is your backyard per se, right? And what I'm curious about is the real demand for physical in this time right now, because obviously the futures, they're physically delivered. I think that's also something important for everyone to kind of understand, where are futures, network, gold, where if you want to get delivery, this is the place that you're coming to through CME Group. I'm curious, are people just price speculating right now? Is this just a hedge where you're seeing people coming in and just buying the price of gold, maybe the ETF? Or are you seeing real demand for people that want to take that gold in and store it in a vault?
Yeah, it's a good question. Really going back the last probably 2-3 years, you've seen a switch in demand from typical retail investors more to the high net worth institutional side, where they're saying, listen, I have absolutely no exposure whatsoever. I never believed in this asset class before. And now they're looking at it from an insurance policy standpoint or a hedge, whatever you want to call it, but getting some exposure. And that has dominated the trading or buying activity that the industry has been seeing. Really, the retail investor really started to disengage going into 2020, end of 2023. And then actually, as the market has risen, retail has been selling into that. There's been flurries of activity where you've seen some buying and pockets of excitement, that type of thing. But for the most part, it's really been on the gold side. You probably had people selling on every wave higher. Silver is an interesting one because silver has seen more and more demand from a standpoint of saying, listen, hey, the gold silver ratio is 106-1. This thing is relatively undervalued compared to gold, but gold is it's like a freight train right now. It's running over every ratio, every relative trade. You're seeing hedge funds getting blown up, that were trying to play the long silver, short gold trade. They got wiped out when it went through the 90s on the ratio.
And let's talk about silver for a minute, because I particularly like that market. Obviously, it's a precious metal, but also an industrial metal, and it's been languishing. Gold still all by, in the 30s is higher than it's been. But what are you seeing in that market in particular?
Yeah, just for disclosure, I run a hedge fund. It's about 70% or so in silver, 29% physical gold, and I just started taking positions in platinum, just so I have some perspective here. But for silver, it's an interesting metal. You've seen obviously a pickup in industrial demand. The tariff situation has really caused some heartache. I think going back into December, you started to see banks become big buyers of the metals, especially in silver, taking big positions, putting it onto the COMEX, playing the EFP or the exchange for a physical premium, selling the futures against their physical position. And the tariff game kind of brought all that metal forward into the United States because of the concern of, hey, listen, if I have to actually deliver against my short position or my hedge in New York, I can't afford to pay a 25% tariff on top of my existing spot position. So a lot of that started the ball rolling back in December. We had a big blowout in exchange for physical premiums on all the metals, and then that basically contracted when the tariff situation had a little bit of reprieve. Bullion was looked at as exempted. Now what you're seeing, interesting enough, is that the Swiss refiners, the Canadian refiners or mints and refiners, the Australian mint, they're not shipping metal into the United States. This is creating a very interesting dynamic, almost like a perfect storm, so to speak, where you're running out of product because these firms don't want to take the liability of saying, listen, I'm going to commit to a trade. I'm going to sell, to my existing U.S. wholesaler, 1 million ounces of silver, for example, and then all of a sudden, 30 days later, they go to deliver, put it on a boat and deliver it, and then Trump changes his mind, and then you have a massive loss right there. So everybody is kind of holding their cards close to their vest. What that's creating is further tightness in the market, and that's what I've been talking about the last few weeks, is that we would be moving from large contangos into backwardations, and that the next stage of this market was going to be set by physical activity, not necessarily by the futures markets. And that's exactly what we've been seeing is across the world almost, you've seen this pickup in physical demand. About a week and a half ago, you had a 12.5 ton trade go through the London LBMA afternoon fix in gold. Just over $1 billion of metal just bought and on a snap. I mean, that's real momentum coming into this market, and that's obviously what's driving this sort of parabolic type of frenzy almost, is that there's this concern obviously with the dollar and with uncertainty and trade policy and so forth. That's sort of driving things. But the real question is, when does the white metals tend to catch up? And I think as this market broadens, I think that may start to pull these white metals forward. And that's where you start to look at, eventually the white metals start to take off and outperform gold.
And are you seeing the same thing in the platinum market as well? Are you including this in the platinum market? I am.
Yeah, platinum is an interesting. There is literally not much metal out there. I mean, if you've been watching the CME stock reports, you've had 40% of the metal taken out of the CME in the last week and a half or so. Metal is going back outside the country. It's going where it's best treated, and now that there's no more big contangos to the EFP, it doesn't make sense to leave it on the exchange. Platinum is an interesting metal because, for example, you try and buy a couple $1 million worth of platinum out there, and it's good luck trying to find it. I mean, you have most of the platinum that's made is made by Swiss refiners, and they're very shy to ship any platinum into this country because of the tariff situation.
I want to talk about the ETFs. When you talk specifically about GLD, I don't know how much you know about this, but I'm curious, as gold prices start to run up, how much do the futures start to come into play where they have to buy futures to potentially get physical? How does that whole story play out? As when prices go parabolic, and anytime I see a physical commodity in an ETF, I always start to scratch my head and go, wondering what's how much the futures start getting impacted by that.
Well, the authorized participants will use the futures to hedge their own inventory, that they interact with the ETF itself. So the ETFs don't really interact with the futures directly. What you've seen with SLV, for example, is a massive increase in short interest over this, since the beginning of this year. I think there's about 64 million or 66 million shares short right now, which is a new 5-year high. You can make the case that market makers or authorized participants, when metal became tight earlier this year in London, when all that metal was moving out of London to New York to satisfy the EFP, you started to see a rise in short interest, and some are saying that maybe these market makers, the size of this short position was due to maybe absorbing that flow instead of actually getting metal. They would meet that flow with short interest. Others have said that that I've talked to, because lending rates went really high earlier this year in all the metals, is that on the equity side, you started to see untraditional players in the metals markets like Citadel and so forth actually start lending shares of the physical commodity ETFs into the market to try to make money on that high lease rate that the physical was people were having to actually pay to get the metal. And so you've had more players come into this market, but again, I think what people need to understand is the physical markets are very small relative to the broad financial system. It doesn't take a lot of money. $100 million going into the platinum market, the physical platinum market would just wipe it out. I mean, that thing would start to just go vertical. There's only so much platinum, for example, on the CME, and you have position limits where you can only attain 25,000 ounces of platinum each contract month. So these are very tiny markets. Silver is the same way. If you start pulling metal out of the system, not in the ETFs or in the futures markets, and take it out of the depository systems, that's going to delever the system. And that's what I've been saying was going to happen really since 2022 when Basel III got implemented. You started to see banks become penalized for their unallocated programs where client wants to buy metal, the bank sells them that metal but backs the contract with their balance sheet instead of actual physical metal. Well, Basel III came in and started to penalize with these high reserve requirements that are needed to offset that transaction from the bank side. So you've seen more direct buying and more and the banks actually kind of walking away, actually moving their business more onto the exchanges themselves rather than sort of the last 20 years of simply saying, listen, I'll take the trade, but I'll sell you into an unallocated pool of metal which is basically a sponge that absorbs flow. Now you're seeing that dissipate and you're seeing actual money coming in, taking out physical product. And that's why you're seeing the stress in the system.
It's super interesting to me.
Absolutely. I wanted to ask a question really quick about, what are your thoughts on, suddenly we're seeing India and China ETFs or ETPs holdings kind of explode where, before we kind of just saw central bank buying, but now we're seeing more of the retail end buying. So what are your thoughts on that?
Yeah, they certainly, the flows, China has just exploded this year with regard to percentages increases of metal going into those products. I think it's just a recognition that, the gold market is sort of looking at the big picture of, hey, listen, every country's in trouble right now, or every country's over indebted or levered. Economies are slowing down, uncertainty is picking up. These are things that drive. You have to understand, gold is a fear trade. It's not a greed trade. So fear is a much stronger emotion, and that's why gold, when it locks in, tends to be a very strong sort of. If you step in front of this freight train, you're going to get run over. It's scary though, because when you get these parabolic runs, you never know when this thing's going to end. I mean, it could be an overnight comment by President Trump talking about, hey, listen, we're going to pull back on the tariffs a little bit, and we're going to maybe come more with negotiations. I mean, anything to kind of relieve the pressure or the stress or uncertainty. But right now, there's just a lot of fear out there, and I think it's resembled in not just the U.S. markets, but like you said, China, India, the currency markets, the leverage markets, the debt markets, the bond markets. They're all seeing a lot of pressure here, and I think it's just people are looking for that hedge or that insurance policy that just says, listen, I don't want, I want to remove counterparty risk. I want to remove systemic risk. And that's, the gold and silver market, the physical market, are one of the few assets that can actually provide that coverage.
So many stories around metals right now. And this was really fantastic, Bob. I can't thank you enough. Everybody go follow Bob on Twitter at Profits Plus ID. You go there, he's got a link tree in his X profile, and follow his websites. Again, Profits Plus Capital Management and Idaho Armored Vaults. Bob, absolute pleasure meeting you. Learned a ton today in just our short little time together. look forward to having you back on the show. This story is going to continue, Shai. It's just going to continue. So, Bob, thank you so much for your time today. We really appreciate it.
Sure. Thank you for having me on.
All right, Shai. You know, it's a lesson for everybody to understand commodities markets and, you know, how the futures really play a role into things and what's really happening. And it's also an understanding of when you see a parabolic move in a commodity, it's not smart to fade it. Right. You don't know what's going on behind the scenes here. You don't know. This is what people may have to buy. They have to use the futures markets, you know, to get gold, to get silver. I think platinum is a story that's going to continue here. I thought that was very interesting. That was the one thing I took a lot from it. But one thing in the back of my mind, I'm like, boy, that's him talking about the small dollar amount that could move platinum.
Right, exactly. And how little there is in the market and how people are holding back from selling to the United States as well. It was very interesting indeed. Yeah,
I mean, no doubt. So anyway, before we let you go today, Shai, anything else for traders to keep an eye on before I get technical with Pharm?
Before you get technical, no, you know, again, it's a quiet day, so without a lot of data, you know, keep your eye on things like the yen, the Swissy, gold, silver, you know, because that can tell you a lot about the sentiment in the market.
Yeah, no doubt. And again, thank you so much, Shai. We will see you later this afternoon for hot commodities. All right, let's bring in my boy Pharm. I've got a bone to pick with him, by the way. Hey, Pharm, can you hear me? Hold on, Chuck. Can you hear me?
What?
He left me hanging yesterday,
You're breaking
folks.
up.
I'm not happy. What?
You're breaking up, Billy. What's that?
Is he here? What was the question? We had a total CNBC moment, and he shut me out. That's what happened. I know it. It's okay. It's okay.
Yeah. Just be glad you weren't here on Thursday. That was worse. So had some issues with the old internet service provider, and it's been lingering. So hopefully fixed for today, with the exception of lighting. Obviously, I've got to reset some settings, but the good news is I'm a lot easier on the eyes with the lighting down low. So
yeah. So yesterday, despite the, you know, you shut me out at the end a little bit there, we had great commentary together, you and I. We talked about this tape, potential to run away. I talked about looking for, you know, 5170 to 5130, not bad for some Boomer Bollinger Bands and some VWAPs, right, Pharm? It's not overly complicated sometimes, right? Sometimes things just work. But, you know, in all seriousness, we've talked about how this is really a bear market, and we talked about coming into yesterday, a lot of earnings. We haven't talked about that this much this morning, but a lot of earnings probably going to be driving the tape a little bit. As you saw yesterday's action, what's the thought process, the mindset coming into today?
yeah, I mean, the first thing is it's a great time to be a day trader. I mean, I'll say that. I mean, I just what a brutal swing market right now, right? And we talked about this when we were talking about doing the show. I mean, this is last year that 2025 was probably going to be an excellent year to be a day trader, where you can just get your sleep at night and then just come in and pick out a few handles and not have to worry about, you know, where the market's going to go in 2 days from now, right? And I feel like that's where we're at. I mean, yesterday was, you know, a pretty persistent offer, right? But it wasn't like disorderly panic selling. I mean, it was just somebody needed an exit, and it was oppressive. And then once that kind of wet blanket came off, we got a decent rally into the close, and here's where we're at overnight. So, you know, I posted on X last night that, you know, I'm a bit torn because, you know, generally bullish things don't happen under a prior week's low. And so we had talked about, you know, that being, you know, the first trigger, the inside week break to the downside for yesterday, you know, but at the same time, you know, I was looking for that 51.46 3/4. That was the 410 low, to potentially be swept out into 51.30s and, you know, reclaim. And that could be a potential long setup, right? And I mean, here we are, but you've got those two things, you know, somewhat conflicting. Ultimately, bulls are going to need to get back and work through last week's range, or they're going nowhere. And so a day like today, you know, I don't really love the gap up. I would have preferred trading lower first, see some meaningful accumulation and interest from buyers, maybe in the 5150s, and then see it lifted during cash hours. I just always feel a little bit better about a cash hours lift as opposed to an overnight float. Here we are, with an inside day gap up and a broadly bearish trend. Like, most of the time that doesn't work out very well for buyers. So I'm a little bit cautious today, on this gap up, but really open to both sides because of, I did kind of like that potential bullish setup sweeping out those 410 lows. So
Yeah, I agree. I think, I have been pretty bearish, and after what I saw yesterday, even into that close, that little bit of a bounce, I said, you know what, let's see if it gets sold quickly. Is it just a squeeze? And it sustained itself. And so now I look at the tape as more of a two-way tape coming into today. So let's hop into the charts here. A couple things I want to start off with. So NASDAQ. Yesterday I just focused on S&P. Today I'm going to look a little bit at NASDAQ. And I continue to say that I start with the Bollinger Bands, and I look to see what the mouth of that Bollinger Band is doing on a daily. It's 20-period, 3 standard deviation Bollinger Band. And these Bollinger Bands just cannot come inward. And why does that matter to me? It matters to me because when a Bollinger Band is contracting, it's telling us that volatility is coming down, right? Yesterday didn't feel like a busy day, but what was it, 100 and something point handle in S&P? I don't know what the range was in the NASDAQ. Another very busy day that felt quiet, as weird as that is. And again, I go and I look at market environment, which is what we try to talk about every single day here. When I look and see what these Bollinger Bands and how wide they are, I expect continued volatility. We might be going down again, and volatility may not feel like it's going up because I don't think it really has to. I think it's at a really steady place. When I look at Bollinger Bands just kind of getting flat, or the top is somewhat coming inward, ultimately it tells me I still think as long as we're below these moving averages, that I look at this and say we're more vulnerable for this low to get tested. I mean, it is what it is. I mean, and I think it could actually happen no problem, and it could almost quietly get marched down there. But we're going to talk about today, and I'm going to talk about some things I want to see there. So first thing I want to do is I'm going to pull up a VWAP from that low. And what I want to see here is where we are relative to the VWAP, which right now we are just a skosh below it, which is 18,420 in the NASDAQ. That's nothing. It's 300 points or so away from it. Yesterday's high was the stone cold high of that VWAP, and that VWAP is basically from this recent low to here. One standard deviation comes in at roughly around 17,940 as they violated in NASDAQ yesterday. Now we're kind of caught, I think, in this channel today. So what I look for today's range is roughly 17,940-ish up to roughly 18.5, we'll call it. You got the VWAP anchored off the recent low. You've got the 8-day moving average up in there. Would not be surprised, because it just feels like we're channeling lower to come up another few hundred points in NASDAQ, which I think would probably be a sale. I wouldn't even be surprised to see it squeak a higher high and then come back in. I think if it goes up there and doesn't make a high and starts to come back down later in the day, I think that would be a sign that we probably start pushing lower with some acceleration. So I start with the NASDAQ and I look at this and go, today, are we going to spend time in the body of that candle yesterday, which is basically one standard deviation to the VWAP anchored off the recent low? Or if we start to go lower and get below 17,940, I will then look at that as a trigger to push S&P lower. And I think they can make a lower low today, and I think 17.5 and change is very, very possible. So I start with what the downside leader is. I'm getting some ideas of what I'm seeing there, and then I'll go into what I see in the S&P. Now, the S&P, I just have the one standard deviation up right now because it's just what I was focused on yesterday. We talked about this 5130 Pharm. That was the area I was looking at. The VWAP comes in roughly 52, 53, 54, which is basically the stone cold overnight high. When you look at yesterday's candle in the S&P, we were above the VWAP to start from the overnight session. And as you can see, it's relatively stronger than the NASDAQ. The NASDAQ violated the one standard deviation the S&P did not. It protected it. So the S&P feels to me very contained in this right now. Again, channeling lower, but would not surprise me if today we got above the overnight high. There's some room to go up there and potentially 52.80 up to 53.20, and there I expect a real dogfight, and I will be looking to be a seller up there. I will be buying puts up in there. I won't be super aggressive with them because I'd like to see us still come back and close below 52.50. But on rallies today could be a little bit of an unwind day from yesterday. I would look at selling this rally because I think we're going to continue to grind lower. It goes back to what you said, Pharm, and it was spot on. This is more of a day trader's market. You got to rotate out of positions. If I'm short and I see a move down today after the morning rally, I probably cover or at least trim most of my position. Don't get greedy. There's a lot of volatility, a lot of price action, and I think that the market is going to continue to test its way lower. I don't see it being super clean. And so last thing is, when I look at the other markets, is there anything coming out at me today to help me bullish or bearish? And really not so much. I mean, 10 years pretty flat. You know, bonds are up modestly today. So you got a little bit of mean reversion back in bonds today. Actually, let me pull this over here and see what this looks like. Yeah, bonds, what's funny is they actually look very similar to S&P and NASDAQ. You almost could look like it looks very like a similar chart. It looks like an index. Back in the body of yesterday's candle as well. So I also watch bonds. If they start to escalate lower, I say this every day, that's a bearish sign to me. But if they kind of stay here and potentially sideways, you know, S&P could have a mean reversion type day as well. And again, you know, I pull up the gold chart just because we had Bob, which was great to have him here. And I look at this market, and hopefully you guys got a taste of what it's like to look behind the scenes in the metals market. It's the reason why you don't potentially fade these types of markets. Although gold is coming off today, we'll see what it does. I don't think it's going to be any trigger to what the S&P does. Even if it were to start going lower from here, I don't think it matters much. But again, if it is a mean reversion day and gold does start to come off even further, it could add a lift to equities. Not saying that it will. It's something I'll keep in the back of my mind and watch and see how the action is. But that's what I'm looking at for today, Pharm. What about you?
Yeah, I'm with you. I'm thinking two-way tape, probably at least early for the most part. And, you know, again, I had shown, you know, this giant range as something that I'm open to considering that, I mean, this could just continue to fill out for weeks, maybe. And so to me,
Good.
I don't see, you know, a large move coming until we've broken one side with continuation. And so that's why we keep getting this back and forth. We're still, you know, again, coming back to these first 3 days, all the action to the right is inside of that. So we are going absolutely nowhere. And so, you know, if you were short yesterday and holding for new lows, I mean, as long as you took some profit, you probably don't feel too horrible today. But if you didn't, then you're in the round tripper camp, you know, pretty quickly if you entered anytime during cash hours. So we're not going anywhere anytime soon. And so having any kind of a strong directional swing bias just isn't going to work. I did see, you know, again, as you mentioned, bonds are a little bit chilled out today. The dollar's a little bit chilled out, not, you know, quite going to zero imminently. So it was a nice setup for a bit of a rally here overnight. And, you know, maybe that's mean reversion. Maybe bulls show us something today, you know, but again, you mentioned, you know, 5250s, you know, 5251 to 60 basically comes in to, you know, last week's low. And as I mentioned, we're not going anywhere to the upside if we are capping, you know, last week's low as the upside. So that's going to be the first key reclaim. And I think you're right that, you know, we could come in and we could trade above there and even take out yesterday's cash hours high, which is 62.5. But then just come up here and test Thursday's low, right? And reject there. That would be an RTH gap fill. We even have, you know, we had the 5 p.m. Thursday close, gapped down from that, you know, overnight on Sunday nights. We've got obviously the cash hours closed. So I could definitely see us coming up in here into the low 5300s and then kicking back down. But I agree that generally it's going to look a lot more bearish to test higher first here today, as we are, and fail. You know, if we get some kind of inside gap up, that closes red, down towards the lows, then that's going to be a decent setup for continuation lower, I think. Whereas, if we can put in some kind of a bullish inside day, or, obviously if we can find traction above yesterday's high and not get kicked back out of last week's range, then that would be a decent look as well. I just still don't really know that we're going anywhere anytime soon. So that's kind of where I'm at.
So let's dig into the day's action, maybe touch a little bit on NASI as well. I'm just curious what your thoughts are in there and if anything's kind of catching your interest.
Yeah, NASDAQ is certainly closer to last week's range, right? Like, it's just been flirting with it all night with last week's low. So at least in terms of that technical reclaim, it's a little bit closer. But similarly, we're going to have to recapture the meat of this range here. So you had mentioned what, 18.4s. I was looking at like 18.250 to 18.285 ish, really maybe up to 18.300 as being kind of a key reclaim for the NQ. And I mean, if this thing can base and hold above, again, call it 250 to 300, then we could start working back through some of last week's range. And that would be a pretty good look after the trap lower to start the week. So it has some potential here. Again, if it can just find acceptance back in last week's range would be sort of the first step. And it's just keeps flirting with it here overnight. Let's take a look at what ES is doing on the short time frames. I mean, so far consolidation over 51. I'm going to go with 93 to 98, even like 51, 93 to 98. To me, looks okay for the morning action to continue to make attempts for these 5250s. As of now, holding over, 52, kind of a minor level around 52.14 to 52.20-ish, and finding consolidation above there. So, I mean, as of now, it looks great, right? But as we know, cash could open and they may feel completely differently and just see this as a fantastic opportunity to sell. So I think you look at the first move, and we'll get into specifics in a minute, but I mean, in general, I look at, what's the first move and then what's the counter move from there, right? So, let's say we drive higher at the open, buyers are making their opening salvo, and then, sellers come in and try to counter that. Well, how much traction do those sellers then get? We'd put in a higher low, or do we break the IB or the opening range to the downside? Those are kind of the things that I'm looking for on a day like today. Again, I really don't like inside gap ups on a broadly bearish trend, but I'm less bearish about it today than I normally would be. Like, I'm usually just chomping at the bit to sell this at the open. I'm not as much today, perhaps.
So coming into today, what's the plan when you see the fact that you're not superly interested in, like you said, chomping at the bit? What's the plan? Wait to see, test higher, test lower, two-way tape. If it does test those areas, stepping in, or wait to see them hold, then get in. What's the thought process there?
Yeah, hey, look, if they make me sell it, I'm going to sell it, right? That's for sure. I've never shied away from selling this pig. But yeah, so I mean, if we come up here and let's say we sweep out the overnight high, still in this 5250s to 60 range, and reverse back in, any kind of a failed reclaim of last week's low, yesterday's high, the overnight high, they're all sitting kind of right here, right? And so any kind of failure to find bids above there, that I'm going to have to step on it. And I'm probably coming back to, first target's probably going to be wherever the swing low ends up. If if we don't trade lower than here, for the next 35 minutes, that's probably first target. And then I'm looking to see if we can get down through that kind of like 93 to 98 spot. If we just consolidate in here before the open and we drive lower at the open, I'm actually okay taking longs down here if we see bids come in again, those 51.93 to 51.98, that might be something I would look for, at least to give bulls a chance to get a retest of the overnight high. So that's something that I would be open to. Now, I do think if we drive lower and then we're capping the 51.90s as upside, then we're probably just going to start puking back through some of the overnight range and back into yesterday's lower range. So opening drive higher first. Does that sustain a bid above yesterday's high / last week's low, since they're kind of in similar spots? And if it is, then I'm not going to sell it. I'm going to wait and see what happens up here towards 52.85 to 52.97, let's say, because again, failure to reclaim, Thursday's range. We still have, a gap in here from Thursday. And so that, to me, is just a back test short as well. As you mentioned, I mean, it's going to have to crack back into yesterday's range to be any good. But to me, it's worth watching that spot to see if sellers come in and trap and generate a failed reclaim. So I'll be a little bit more reactive. I probably won't short, in here directly. I'd prefer to see an attempt and a failure first if we do trade higher. And then similarly, if we're trading lower first, I'm not bidding, really anything directly, but I am watching the 51.90s. Anything else in here, I think, is mostly just chop, just sort of filling in some volume from prior days. So let's take a look on the 5 here.
Yeah, I like the plan around the 51.90 area because it's got basically right around the open of Globex. And when you look at it, we've had these every other day candles, right, where we're grinding lower, and now we have a gap higher. If they can hold the Globex open-ish area is kind of basically where your area is, and they start to bounce, it would not be surprising to me at all to see them go back up, test the overnight high, and potentially go towards yesterday's high. Again, I mean, we're just channeling. And, we've had a lot of these inside type days, and we're still coming off of the holidays. I think volume's a little slow overnight again. Europe was off yesterday. We've got earnings coming up. I just don't think anyone's aggressive to either side. So again, that's why today, as yesterday as bearish as I was, today I'm coming in and I'm going, can't be in a hurry to press this thing. But you're right. If it starts to get below that Globex low or that Globex open even, I think then it starts, they start opening the door to yesterday's low. And so I think that's the area that I look at this morning as really pivotal.
Yeah, I mean, interesting action. I mean, I don't know what this was all about, but I mean, there still is a massive set of overnight single prints from this kind of bizarre move. There was a little bit of a battle, right down there, kind of low 80s, I guess it was, and then it just sort of just scooted and left behind those singles, and it's been upward consolidation all night from there. So not a bad look. And, you could potentially have some trapped sellers. I think those singles would fill down about 87.5, I think it was, maybe. So, definitely watching this area. But you can see on the profile, yesterday's profile, and now the overnight profile. I mean, all we're really doing is just kind of filling in volume here. The weekly profile is nowhere near ready, at least for me, to make any kind of determinations on it. Usually by about the end of day Tuesday, I start to get a pretty good feel for what the week is trying to do. And right now, I think we're just filling in volume here. We've got to see what cash participants have to say. I mean, it's like yesterday. I mean, you never know when there's just some player that just has a bunch to sell or buy. And so they just come in and it's just a buy program or a sell program for, however many hours, right? And then just all of a sudden it just shuts off and it's all done. Or some other kind of player comes in. So definitely want to see, how this thing opens and how it responds to an inside gap up. Because again, I'm usually pretty bearish on these inside gap ups. And so if we don't see sellers come in and step on this thing, I don't know. I think we need to pay attention to that, honestly, because this, if sellers are really going to be active, they're coming in and stepping on this pretty fast, I think. Yeah.
And all these earnings, I think, is really going to be so important to what happens in the coming, months, not just the coming week and days, because if we go back to the last year and a half, everybody was chasing forward guidance, right? Like everyone was like, you go back to the NVIDIA story where everyone, NVIDIA was blowing out earnings and everyone was trying to play catch up to what they were doing, and their stock in particular, but a lot of other ones as well. And now all of a sudden, we'll see what earnings come out as, right? I mean, are we going to have softer earnings? What's forecasts going to be, and what has changed from just one year to the next? And I think obviously markets. We could talk about all the headlines and everything we want. These big stocks, when their earnings are starting to come out, that is ultimately what's going to set the tone. And so, in the near term, it's not surprising to see inside days. Again, quiet tapes were grinding lower, yes, but ultimately, don't be surprised if it's grind higher type days either in this big range. We go back to, we've talked about this, Pharm, since the 90-day pause, we're just really trading in that big candle. The market is trying to figure it out. And there's been no clarity yet. Obviously, I've been leaning more towards the bear side because I think that's what the tape is telling us. But they're not going to give it away easy.
Yeah, that's right. And the point on earnings, I think, is well taken. I mean, we got the pause, right? So that's the big news. Ultimately, it makes sense to just sort of chop and consolidate while we wait for important information. And earnings and a potential earnings decline or deceleration, at least, is certainly going to be some of the biggest news that we could get. So if earnings are fine, then maybe we can see some upward consolidation, possibly even break that range. I don't lean in that direction with some kind of big rally to 6,000, but I can't rule it out, especially because you never know what the news is going to do. But good earnings would definitely be a good thing. Bad earnings is probably how you get the range break to the downside of just everything is just terrible, and absent any other kind of headlines. So I think that's going to be a big deal.
Yeah. Pharm, again, thank you so much. We do this Monday through Thursday, 8:30 to 9. Sometimes you're nice to me at the end of the conversation. Sometimes you're not. I mean, it's it depends on what mood you're in. I mean, I get it. But overall, I have a lot of fun. And everybody, make sure you follow Pharm on Twitter. He does a phenomenal job on X. And also go check out what he's doing in his Substack. I mean, the dude's pumping out content nonstop. Absolutely love your work, and I love our mornings together. So thank you so much for joining me again, my brother. See you tomorrow.
See you tomorrow, Deli.
All right, Pharm Navy, make sure you hit that like button, and look who's back, feeling fresh, looking good, coming off of a nice vacay. Tanya Trades hit the like button for Tanya coming back. Tanya, how are you? How was your vacation?
I'm good. It's good to be back. It was great, it was a little short trip, but I saw a lot. Like I went all over San Francisco, honestly. And then I also went down to Monterey Beach. I went to like an aquarium there, one of the best aquariums in the US. It's cool. Saw some otters. I've never seen otter up close before, so that was cool. And then I did go to Napa Valley, and that was great too. So went all over.
Yeah, I love San Francisco. I haven't been there in years. The bump situation was kind of a little off-putting the last time I was there, but for the most part, the city is a lot of fun. They have a great Italian area, Fisherman's Wharf, a lot of stuff to do. Napa, of course, is great, but overall, I'm glad that you went out and enjoyed it. Talk about the mindset coming back. You traveled, you went to the West Coast, which is always not the easiest coming back to the East Coast time zone. It always crushes me just a little bit. It's weird when I go back in time and come back, I'm always screwed up. When I go to Europe and come back, I'm fine. I don't know why that is, but you come back, few days off, you're back at your computer, streaming, trading. What's the mindset coming into today?
Yeah, I mean, actually, I think this might be the first time because it's the first time I went to the West Coast ever. Oh, wait, I went to Detroit once, and that's like an hour difference or something. But so it was like the first time I'm coming back forward in time for like more than a couple hours, for 3 hours. And, I tried not to, I tried to stay on New York time while I was there, but I was going to sleep a little earlier, but still, I came back on the red eye. And I took the yesterday off essentially, right? That's what I made sure to do because I was coming in at 5:30 a.m. I was like, there's no way I can trade or stream or provide any type of analysis at 9 a.m. because I'm just not going to be all there. But I did like seeing that my short side target from last week did get hit yesterday, so that was good. But other than that, it's kind of like, okay, kind of coming back into the groove of things. It's pretty much, I feel okay though, coming back. However, looking at the daily, if we're gonna get into the charts, it's I don't really love it. Yesterday was a very large range, I think, and today we're opening up inside of the range. And I don't love it. I don't love it because it's like, okay, I don't really my 4 hour, we'll go to the 4 hour, but you can see here we opened up near the lower side of the range and we popped back up, so it's doesn't really look like much of a direction here. See that I could think about, but yeah, I wanted this. I was aiming for this 4 hour low essentially, and don't really love the. We had a nice bounce back up above it, and I just yeah, we could come back down, retest this if we want to, but right now we're having a little bit of a sustained bounce. And yeah, I'm gonna take it. I'm not gonna be rushing into a trade, that's for sure. So like I'm not gonna make sure I don't do anything I don't normally do. Like it's not the time to experiment coming back from a vacation or even just like in general in this kind of tape. It's not really time to like, oh, let's see. I've been noticing this a bit. Let's see if that's gonna work. Like it's not gonna be helpful. Um, so just making sure I stick to what I always do and what I'm comfortable doing. Um, let's see here. The 4 hour, yeah, where it looks like we are having like a sustained bounce there. Um, let me just put up my little uh, line there for ES as well, but there we go. Yeah, we hit that liquidity pool. So basically that was area I was aiming for last week, especially, yeah, we had, if we remember from last week, we had taken out this low that completely filled in this gap up. After we broke that, that was indicating to me that, you know, we failed to go higher and we broke this low. So bearish structure is confirmed. And it's pretty much following bearish order flow, tapped this gap, continued lower. This bounce was, I wasn't around for this, I don't think, but this was a little wonky, but it did come back and bounce after taking out this low. And then we did come back down into here after a gap down. We had a very large range there yesterday, actually, right? It's like, wow, okay, like 600 points or more. So around 700 points during the New York session, regular trading hours. So today, we're in an inside day and we already kind of covered 450 points from where this low was, right? So and from that open. So I don't really love it. I think Pharm was talking about that too. Like, so basically I want to see if this is the 4 hour. I'm kind of looking at this to see if we're going to close above this, but even so, with this kind of wicking it, if we go higher, I think it could be a slow grind higher, high resistance situation, just from this getting wicked down here, and then we're kind of gyrating back and forth. I'll go to a lower time frame in a bit. I do want to map out like the fib from this high to this low to kind of see, because even so, it looks like this is below 50%. So that doesn't mean that we're just going to switch bullish. Even if we do close above it, like that could just be repricing to this gap again, especially if it's in discount. So let's see there. Yeah, so it's below 50%. So it doesn't really mean much to me. It's not like I would think that we're shifting bullish if we do end up inverting this. I would have probably this high marked out and more likely to kind of mark that out as potential liquidity sweep and looking for divergences with this high that tried to invert it. Especially it looks like it's like the pre-market high. If we go down to the lower time frames now, let's go down to the hourly. Yeah, this is London high. I'm interested to see the reaction there. And then let's see, this is the London high from yesterday, actually. Yeah, wow. It's very clean here how it came and rebalanced this and then dropped lower. You know, this is pretty nice bearish market structure until it hit my target here. And then right now it's following bullish structure, right? We did on the hourly, we broke above this high after we hit this liquidity pool. Pretty nice V-shape looking recovery there. The question is, you know, where are we going to? Like, and it's a difficult market if you're having a large day, but the day before, and then today it's like, okay, we hit my level yesterday, and it's looking like it could be an inside day. So it's really about me thinking about, okay, is it worth the risk, and is it worth me putting the money on to see where this is, to putting on the expense to see whether this trade is going to work out, and thinking about the probability wise of things working out, and just making sure, again, I don't deviate from what I usually do, so that if I do take a loss, I'm comfortable with it and it's a good loss. Just the same thing as always, but today might be just a tougher
Yep.
day in that regard. I think, yeah, Pharm was talking about the same thing. Yeah, today's a tougher day. There's some days where I come in and I'm like, okay, yeah, we're going for this level. It's pretty clear. Today, not as clear whether we're gonna just fail here and then continue lower, or it's more likely, since we are still in a discount, that we do perhaps reprice a bit higher. We could take out this London high also from yesterday. But yesterday's highs, I think I would mark that out as well as a level. Yesterday's daily high, it's all the way up here, right? All the way up there, 838. So it's unlikely we're gonna get there. Let's see. Yeah, it's very unlikely we get there. But we could, in the meantime, go for this high, perhaps, you know. This is the start of the move lower, and this can completely fill in this liquidity pool. So, meanwhile, this one did. But I think it's essentially going to be a hard, high resistance type of environment. I think it could be choppy. That's what I'm coming in, and like that's fine by me. I actually am happy I'm happiest when I could kind of predict that, and then I don't lose money. I stay safe, because those are the hardest environments where, you know, for me, I like trending markets, or like, I don't really love a range. So I know that that's not my forte. And then if I kind of anticipate that it might be a rangy day, then I know, okay, think twice before you enter the trade, essentially, and be very cognizant of whether that's a good high probability idea. So, you know, there's a couple things that could happen. I'm kind of really interested in this pre-market, our London high here for ES and NQ. Maybe one of them hits it and fails, and then we start dropping a bit lower, but I would demand from the market like a clear direction. Like, I would mark out this low. If one of them sweeps this high, I would not jump in and just short that, because we could just grind higher. I would need a nice clean closure below this low here. And I'm just basically demanding confirmation from the market and not going to get chopped up. That's for sure. Yeah. What do you think about that,
I think
Deli?
you
Like,
said it best. Demanding confirmation. I think that's the best two words of the day, because we're opening up inside yesterday's range and a gap higher. You had a one-dimensional day the whole way down yesterday. It turned on a dime in the close, and since then the momentum has completely shifted back to the bulls. But yeah, we're inside day. I talked about 5250 in ES as the VWAP off of the recent low.
yeah.
You know, the low of the year.
That's funny, because I have that
and I
level
just look at
here.
it and go, yeah. And so I agree with the London session high, I think, is key, because if they build above that, I think shorts start feeling even more pressure, and then you basically unwind the entire week. And then we learn a lot more if we go up higher, and then we start to fail. I know Pharm and I talked about some resistance levels up top. The flip side is if we do take out the opening Monday night opening low, and we get below that, then I start to see, okay, yeah, I mean, like you said, demanding confirmation. I think that really is the theme today. Inside the body of yesterday's candle, yeah, I just don't love it either. I don't think anybody this morning we've talked to has said, that there's a clear path for today. And we also talked about it again, Tanya, a lot of earnings coming out right now. And typically, I'm not somebody who's following earnings super closely, but right now the market's really tied to headlines, and it's like, it's kind of, I think we're kind of in wait and see mode at least. I don't know what earnings are coming out today. I'm sure we'll put that in chat later, but yeah, nonetheless, I know you got to go to your stream. I appreciate you again every morning, Monday through Thursday. Tanya's with us from 9 to 9:15, and of course Monday she streams with us all day. Glad to have you back. Of course we missed you, and you look refreshed. And have a great stream today, and have a great trading day. And then we will see you tomorrow.
Thank you so much. Good luck. Good trading, everybody.
All right, everyone, hit that like button for Tanya. Like I said, she's with us every morning. And look no further. He got a haircut. He recovered from his cold. He's got he's got the vest on with the collared shirt. Yeah. You were going through a rough one, man. I tell you, I looked at you. I'm like, man, this guy is a trooper. I'm so thankful that you came in and spent some time with us. But I knew you weren't really feeling well. But you wanted to come on and do the stream. And so I'm just glad to see you looking better, my brother. And so how's everything else going?
It's going good, man. I don't take a lot of days off. I know you're the same way. Not a lot of sick days and personal time days. As you get into trading, you have all the free time, and then you just I think a lot of the best traders are real grinders. So, but yeah, doing good, man. I might be coughing a little bit today, but doing all right.
That's good. How was Easter? Everything good with the family?
Man, with a 1-year-old and a 3-year-old is a blast. All the little Easter egg hunts and the outfits and the candy all over the clothes and making messes and dyeing Easter eggs with mom. And yeah, we had a good time.
That's fantastic. Well, let's take a look at Merritt's charts. Let's see what he's got going this morning. So Merritt, you heard us this morning. I always love coming in because with you coming off the morning session, we talk a lot about environment. We talk some macro, a lot of things that maybe, don't necessarily pertain to you. But some of it does, I know that for sure. And then you come in and you always give it to us right exactly what you're seeing. I'm curious. We got a gap up. We talked about what happened. Yesterday you had that one-dimensional day back up in the body of yesterday. What are you seeing this morning?
Yesterday was very predictable. It's funny how many people had those levels near the lows. I was talking with my traders on the desk, and we were talking about in NQ that 17,700 area or whatnot was where that market was trying to get to. And we were talking about how easy the pullbacks were to short along the way. And then as we were speaking around 1 p.m., we were saying, look, we're getting into this level. The risk reward asymmetry, where opportunity is skewed. This is a long setup. Now, unfortunately for me, I wasn't able to get the long. I was looking for, and I told my guys this, I was looking for a really good order flow shift on the tape, on the cumulative delta, to see the buyers really take it. And it was actually kind of a weird move up into the close where it was on very little to no delta. There was no change in the pattern of the bids and offers being hit or taken. So didn't get any access to the trade. We had the trade idea, we had the level, didn't get access to it. But the shorts on the way down were really nice. So that was, I was talking swing long risk yesterday into that level with guys. It's kind of, you've got the big blow off bottom. If you zoom out and think about like a daily bar chart, this is a little ABC pattern, right? This is a little higher low to me that looks like is kind of forming. And so that spot at yesterday's low is super critical. Now, if you look at my chart, you see 1, 2, 3, 4 bars, all with the damn same low. You hate to see it. That's not what we love. You want to see the wick. You want to see the capitulation. And I wanted to see the shift in the tape. So it's one of those that feels like it could easily be revisited, unfortunately. But my read is kind of bullish from there. I think the safest and best way to play it today is to wait for us to start to trade up above, 18,260, 250, 260, this little region right here, which has been a spot for a while where you've got a couple of lower edges of some of these distributions from the volume profile. If we can start to hold above there, because I mean we're trading 18,130, right? So we're kind of moving higher here in the overnight session, continuing off that bounce from yesterday's low, which was an important inflection. Not because it's yesterday's low, it was an important inflection on the charts, which yesterday's low came from and bounced from to confirm a technical view of the market. So I'm leaning bullish. I am thinking there could be a really good opportunity if we hold above, 18,250s, 260s, that kind of region. That's the safer way to play it. Other than that, it's a slower tape so far pre-market. Not a lot of rotations, not a ton of volume. So we'll look for that. In terms of a downside scenario, anything that starts to flirt with looking, well back into yesterday's main distribution, 17,900 kind of upper end of that, you start to hold below that, we're at least going to go wick those lows and clean up that poor low from yesterday. And then critical inflection, those 17,700s. If we are holding below those 17,700s, that's full on bear. That's start swinging for it.
Yeah, I think it's aligned with a lot of what I talked about, Pharm, Tanya as well. Yesterday I thought was predictable. I thought yesterday, this morning, I don't know if you caught the stream, but we talked about it. Pharm and I were both pretty bearish. And, when we looked at it, I said, I was more S&P, and it went right to my level. And I'm like, you know what? I had started a put position. As it started to bounce into the close, I covered it, and I said, I'll wait and see what happens. And I was really almost a nothing position for me because I just was able to just get on the initial starter. And then when it came all the way back on the close, I'm like, well, it hit my level. I kind of got to bail now. And I agree with you. That level was significant for S&P. I'm not watching NASDAQ as much. And when I look at it today, I think you laid it out really, really, really good. It's one of those things where, we talked about earnings a little bit. And I know that because especially as a NASDAQ trader, so much is driven by just a handful of those stocks. I don't have the earnings sheet out in front of me right now for what today is or the rest of the week, and we'll put that in chat. I'll make sure of it, everybody, so you know what it is. How much is that, do you think, playing into kind of why you think we're a little bit quiet right now? And as a NASDAQ trader, is that something you're even keeping in the back of your mind, knowing that some of these big earnings are coming up?
Time and time again, when I start stepping outside of my process, Nadro gave us the short from last week's high to the tick. And I'll be the first to tell you, I had some guys ask me, hey, are we going to take this short, Merritt? Are we going to, this is a setup for Nadro. This is it. Are we going to do it? And I said, no, not with this catalyst, not with this reversal of the tariffs. This is too big of a news event, guys. We're going to go against our process. I gave that advice, and it was just picture perfect. There's the short. Take it. That's the big boy short. So I'm ashamed. So am I going to pay attention to earnings? And am I going to say, well, the market's in wait and see mode. It's going to do something outside my process. I'm done with it, Deli. It's back to process.
My man. Well, that's what I love about you. I mean, you give it to me straight. It's the best. So, all right. Well, I'm going to let you do your thing. I think it's going to be an interesting day to watch. Nobody better than you right now to be in here for us and all the traders. So, again, I appreciate you. Glad you're feeling well. Happy Easter to you and your family.
Happy Easter,
and that's it, man. Have a great trading day, and I will see you. I'll talk with you later, as usual. All right, my brother. Take care.
All right. Thank you, buddy. All right, ladies and gents. What kind of trouble can we get into today? I am kind of looking at gold a bit. Gold's really moving around pretty nicely. I'm actually going to switch over to that chart book. My eyes start getting wide when I see a market that looks like it potentially has gotten really vertical, and it starts to show some signs of cracking. That's a market that's of interest. So we can see here, looking since the European Open, there's kind of some nice rotation, some nice movement. Order flow to me is not as usable in gold, so I won't reference it as much. I'll keep an eye on it. I'm aware that there was a buyer up until kind of the high, and then it's been very flat, which signifies equal buying and selling pressure since that overnight high was put in. But where does it come down to? It's come down to kind of this weekly VWAP area, which is a very logical place for a bit of a bounce. But we could certainly see gold head a bit lower. I know this is a market on a heater, and yeah, NQ will give us all the trouble we can handle. So yeah, I just wanted to let you guys know you might see me flip back and forth between gold and NQ today. Let's mark out some levels just so we don't have to constantly think about the game plan and whatnot. Let's mark out those two key zones that I spoke about with Anthony. Let's mark out, where should we do it? Let's do it on the volume profile chart. So there we are. For those of you more visually inclined like myself, essentially my plan today is this is a bullish reference until proven otherwise. That's kind of the main thought process. We're trying to kind of come up for a test into this. This is a really key inflection. If we can get this, right, that's going to be super, that's going to be the layup trade of the day. And if we get something like this, this could be big time short opportunity. So this is the key inflection that we had yesterday that we were rotating away from. We're trying to get back up here to test this. So I'm kind of leaning bullish until we get to that inflection. If we can hold above there, that renews the bullishness. If we fail, if we do anything other than, excuse me, a wick kind of trap failure stop run through yesterday's pit session lows, then we'll be flipping to bearish mode. What are the levels? Call it 18,270 and call it 17,730. I personally don't remember numbers myself. It's all visual for me. Opening bell is upon us. See if we can catch a little bounce here. Remember, we're bullish, working towards the upper level, so can buy buy some pullbacks. Scaled. Not loving the buying behind it. Sellers now pressing. A little bit of absorption though. See if we can get these stop runs into kind of 170s, 180s. That'd be good. Into the overnight high. Sellers still trying. So if you look at the cumulative delta since my entry, it's been net selling, not net buying since. They're hanging in there, though. A little passive buyer supporting it. All right, going to come out of that remainder of that position. Still got that passive buyer. I just did not like the accelerating delta. If you look at my cursor here, they really started to press it further. Let's see what happens if they actually push it to delta neutral, to kind of zero area in the delta. What company is EQT? I can't say that I know what that company is. Equitax. emotional quotient tariffs. Somebody help me out. What's EQT? Nat gas pipeline. Tried to pop in there, but it was a trap. Delta had gotten down to neutral. We'd taken out that prior little swing low. Try it again. Stall, 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 stall. I'm going to come out of some of it there. You see how the delta is not lifting off of zero yet. Kind of a flaggy up move. Kind of a protective scale out is what I like to call it. We'll come out of that. Fat Fish says buyers coming in on the delta. No, sir, not true. There's some. And we missed the move up. So what has the open done? And the answer is, where's the open? About right here. What has the open done? What have we done since the open? This. So that's just me reminding myself, hey, we got a sideways chop fest open here. I like the little spots where I gave it a chance to go run some stops higher. I really do. But it's not trading well. And here we are again. The sellers are pressing harder than the buyers ever did as they tried to lift that. Some stops ran above at least the opening little highs there. Trying to, JD. That was the plan for my longs that I had tried in this area, was to just, I scaled out of some, and then I was looking to take the rest if we can just run stops up above those of those highs. A little too messy for my taste in this area. I saw earlier one of my students had asked, why not, should we flip to the extreme fade short? No. I'd be curious as to what your thesis would be for that. I'm looking at the bullish key recent rejections off, kind of the yearly, the monthly. I'm looking for that, just as I outlined in the plan. The move off this level yesterday was a key recent rejection. Very, very important, working towards this inflection up here. So I'm bullish in terms of directional bias. So I'm not just going to start taking shorts when things get a little messy or choppy or the longs aren't working out. Overall, this was still a delta neutral that held, essentially perfectly. It just got really sideways and bar to bar overlap and messy in here versus clean momentum. So I was looking for clean momentum and didn't get it. That could be a tactical error on my part, not matching up with market conditions. Yeah, I'm not looking at the support resistance in delta. I am aware of where zero is in delta. It's just zero. Delta neutral is what we refer to it in NADRO terms. And there are implications for inventory and of clearing out of such inventory and things like that. Yeah, gold pressing the lows. Back through that weekly VWAP. $34.04 is kind of a spot on my charts. This market could look for. Look at this candle compared to recent days of trade. It's substantial. It's what I was talking about. That's why I get excited when I see a market that's gone parabolic, because gold might be 100% up a year from now, but I can assure you it's not going to go up 100% in a straight line from here. When things get parabolic, they are unsustainable, and it provides incremental edge for finding, going against that. So gold's pit session. 34.34. Value area from yesterday. I'll give it a little bit more room than that. 34.40s. Some kind of weak, flaggy pullback in gold could be shortable. In Q, almost up to our next inflection. You always hate when you try to position for a move and you're not in it when it goes. It never feels good for any of us, but it is part of the game, guys. It's part of the game. This ain't Pokemon. You can't catch them all. Nothing for me to do here in NASDAQ because we're now up into the inflection area. So, I was trying to pick up the last little bits of long risk reward from here after the open. And now that we're essentially, for all intensive purposes, into that level, it's not a spot where I can just chase it and put long risk on. If you go back and look at those scenarios that I drew on the chart, then if we see a hold above that region, then by all means, we could really look to start pressing some longs again. And quite frankly, it'll be more of a trade, and we can treat it appropriately than we did this little attempt just after the open here. For me, I'm already mentally noting that I want to go through and do some market replay work. Excuse me. And watch that sequence again and see if it felt the same, if the lack of buying warranted some of the scratch decisions that I took. That's a good use of market replays to go through some trickier sequences. Doesn't mean that you'll always find the answer, or that you always go through and then curve fit what you're doing to work for whatever would have worked last. You can't do that as a trader. But it's always good to go back through some of the trickier sequences where you underperformed and see if there is something that you could recognize that you could do better. Let's see if we can find a turning point in gold. Scratch out of it for now. I'm not seeing any downward participation. Let's try it again. Six minutes till the top of the hour. Get that new TPO period. NASDAQ still pulling back, but a little bit of passive buying supporting it. Pretty slow. Just looking for my first scale out point, some type of a stall or reversal or blip that I don't like to see. Okay, we'll take the scale there. Just a little bit of buying coming in off the low. Great scale. Scratch out of the rest of it. That is gold right there. Gold can get quick on you one ways after lulling you to sleep the other. Those passive buyers in NASDAQ held. NASDAQ pushing the highs. We're always locked in here, baby. Let's head back to NQ land. Would you take a full stop there had the trade just continued to chop around the entry in GC? I mean, I discretionarily have my fingers on the hotkeys as soon as I get into that position, but it never threatened. I was never really underwater, maybe $100 or something. So, it just depends on what it looked like, the speed of the tape, what was happening. So for me, it was super slow, stuck in the mud for quite a while. I got a release down lower favorably. It stalled for just a moment. I took profits. And then sure enough, that was the low. And there was a sharp move higher, which I decided to come out of the rest of the position. So I'm not sure what to say about the hypothetical of would I take a full stop. I was willing to take a stop. I'm always willing to take a stop on any risk I put on. That's the first thing you have to do is accept the risk of a trade. Otherwise, you have no business putting that trade on. I constantly just position myself where I have risk reward skewed in my favor. I take some scale outs along the way. That doesn't need to be rocket science. And I'm very in tune with what's happening. Some moves are too messy to participate in. That's just trading. But that's just what I do over and over. I use NADRO type work to help me see where the market's trying to go to, what the market's up to, where some key recent areas that we've rejected that matter, that help me set a directional bias, see some lines in the sand, key inflections, all that narrative work. And then it's all about going and executing, finding. I'm a pullback trader personally, finding spots where I can read the tape, see a nice little pullback, see a momentum shift, put some risk on that's amplified risk reward compared to the overall big idea. And then see if we get lucky. Never know what's going to happen next. But so far today, we've been really positioning ourselves for some good moves. So far, it's kind of a break-even session with a couple scales and scratches. So gold is behaving a little differently than I had was kind of looking for. Sorry, I don't know why that is staying on the screen, but we'll deal with it. So if we kind of zoom into this, what was the thesis that I talked about? This big candle had come into yesterday's balance, and I was looking to fade kind of a retest of the upper end of this. This is pushing a little too far for my taste. It's I understand that volatility is present in gold, so you got to treat things as areas, not lines. But 440, I don't know. It still looks good in terms of DVA. It's obviously really nice looking there still. We could be loose with our areas. Give it one more shot if they start to drop this thing. Beautifully timed. Let's see if we get lucky. All right, it's not sure what's up with everything we touch here today getting stuck in the mud. Just took a third off, joined the bid just to get a favorable fill real quick there. Preemptive, protective type of scale just because of where's the momentum, where's the move, right? Again, I might be doing some recalibrating here as a trader in terms of being used to the faster pace of things that we've been so fortunate to have over the past couple weeks. You've always got to be calibrating as a trader. What's the pace? What's normal, essentially? What is normal? And therefore, when is something different? And therefore, that could be usable information for you. But if you don't know baseline, what's normal, and you're not constantly recalibrating that as a short-term trader, you're lost. You don't have that benchmark. Sometimes I think about you, Tracy. I think, man, I'm gonna have to whip out the crude oil. That used to be my jam there. I used to trade nothing but crude oil all the time. I know you love that market. Let's check in on NASDAQ real quick. Okay, so trying to push through this area here in B period. This is the second 30-minute period of the day. We're now 11 minutes into it, so almost halfway through. Yeah, we just need to see it accept, push through, and then we can start looking for potential pullbacks and whatnot to get on board one of those hypos I have for the session. Gold coming back on us again. Gold appears to be a little bit more satisfied to have reverted to yesterday's VPOC, to the weekly VWAP so far. That might be all she wrote for gold. Who knows? Not everybody who has a course to sell is a bad guy. I have a course to sell, and I think it's really, 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 really good. And I think there's hundreds of people out there who are very grateful that I put that out into the world. And so I don't feel bad about being one of those guys. Just check out our website, apterostrading.com. Gold bigger picture. Yeah, I mean, look, anytime something goes parabolic, it can retrace huge amounts without changing anything, right? Because you get so extended, so vertical, it can come back down just as fast, and you're still in full-on breakout mode. It's, a parabolic market is a very special, rare breed of market conditions. It's definitely in an uptrend, right? But to me, if you at least, just as a basic view here, if we just look at this weekly VWAP and we start taking a look at what's happened, we can see that coming into, last night and whatnot, we were unable to do what we'd previously done, which is test into this first standard deviation area and continue to push out of it. They started capping it right there. So that puts this down move in play, which brought us back inside of yesterday's range and value. So we get stopped out of the rest of that gold there. Which for me puts the low end of things vulnerable. And if the low end of things is vulnerable, excuse me, going back to the weekly VWAP chart, the low edge of that lower standard deviation there could be a target, which is what I talked about, that 3404. We have that level drawn right there. So that's what I've been looking for. Unfortunately, we tried it here, got scaled, came back and stopped, scratched. We tried it here, got scaled, and it's come back again up testing kind of into those highs. So that's why I was saying earlier, gold seems a little content to have reverted back to kind of this yesterday's balance, maybe even just wicking the weekly VWAP. we continue to kind of hold back through it. So once again, I'm trying to position myself for a move that contextually I can see happening. And so far here today, I'm unable to get lucky and catch anything that moves cleanly enough to really allow me to just hold a core position and profit to a larger degree from that. A couple good scale outs, but that's all. No, I don't. I mean, I guess the recommended squawk service I would recommend would be a good filtered X, whatever they call it. Tweet deck is what I call it. A nice filtered list of real fast, real time news folks. So NASDAQ never quite. Let's go back and think about the scenario and maybe even redraw it, right? I would have drawn something that looked like this, right? So that means that this needs to happen. We need to push through to make this a real viable opportunity. This is not that, right? That's not it. That ain't it. That is still just holding the level, which is so far what's the only read that's feasible for NADRO traders. Someone asked, could I short NQ from that level? That's the thing, though. If you go back and you connect more of the dots, I'm bullish from down here. I'm bullish. This is a form of resistance. This is an inflection higher, but there's a difference between an actual line in the sand that creates a directional bias that a trader might have against it. As long as it holds, you are direction leaning in one direction, versus other more minor inflections and areas where you might get a second chance if you can hold above it to get on board with a bigger move and a bigger picture bias and thesis. Not all levels are created equal. I think a lot of newer traders get that wrong. They think that a level is a level is a level. And the way we teach people, the frameworks we teach to see markets, you understand that there's certain levels that have a high quality rating to them. Some of my students even quantitatively rate levels and assign them literally a number, a positive number for bullish, a negative number for bearish, based on the degree of a couple variables that go into what time frame that level comes from, freshness of condition shifts, as we call it, around it, key recent rejections, room left on the table in terms of likely destinations, clarity overall with that. And then you have other more minor references along the way, and those are not the same thing, right? So it's really, really important that you learn a market worldview. Every single person listen to me. You need to learn and adopt a market worldview, a way of making sense of the way that markets move. We have 10 laws of market dynamics that we talk about. If this, then the expectation is for that to persist until proven otherwise. All these type things are things that give us the potential for good lines in the sand, understanding differentiation amongst levels and references, what's important, what's not, how to handle dissonance, how to look for confluence, how to read the narrative, as we call it, the story that's unfolding, what the market's up to. Super, super powerful. Yeah, I don't just trade the standard deviations of VWAP. I think a lot of people have a really hard time grasping NADRO. It's a top-down approach. The only reason I might get to that D, which is the DVA, which is the standard deviation bands around VWAP, the only reason I might be remotely interested in where we are relative to that short-term framework only is because of all the stuff that would come before that. The narrative read, the acceptance picture, which is what we're talking about, whether or not we're actually holding above this NASDAQ inflection that we've reached, which we've yet to hold above. We've yet to accept into it. So, no. I had a student earlier ask, are you not going to short? Because, this is an extreme fade of DVA, which is a way of accessing trade ideas with the standard deviation bands. No, I'm not. I was bullish. I would not take a short just because we're up at a +1 standard deviation or +2 standard deviation. If I was bearish, if that aligned with my view on the market, then absolutely those are ways that I can access the idea using the DVA framework. You got to put more things together, guys. And Lou just used a really good word there in the chat, layers. The way I see NADRO is that each NADRO, each little piece is one sliver of a positive expectancy component of an edge, just a sliver. And really one little sliver by itself is really not enough to be consistent and to do well with. Where real power in trading comes from layering in non-related slivers of edge, grouping them together. That is where you start to get something that's robust, that's repeatable over time, across markets, across time frames. That's what I'm talking about right there. And it's tough. One of the skills we talk about is putting it all together. It's not easy. No back testing here, Victor. Just visual back testing and experience. It's not quantitative. This is my quantitative. I could watch The Big Short like once a month. I really could. I'm not the kind of guy, like my wife, she loves to put on a movie that she knows she's seen 100 times, and she just almost likes it as like a background thing sometimes. I'm not that guy. I pretty much don't turn on the TV for the most part. But once I've seen a movie, I don't like to just rewatch it over and over. But man, I've yet to get tired anytime The Big Short is on the docket. Look at him. Is there anything different about it? Oh, me. Now, one small piece of information. Oh yeah, Trading Places. That's a classic. Another classic, which wife and I watched last night, Caddyshack. Oh my goodness. What a masterpiece. Back to markets real quick. We're not rejecting this area swiftly, right? So we've got this area of interest. We're not seeing a huge shift on the tape. All of a sudden, sellers just do something like this and really just crack it, That's not happening. Fairly minuscule reaction in terms of price once we get into this region, just kind of saying, all right, we're there. We'll kind of flag. Now we'll really get into it. We'll kind of go above it, kind of go below it, kind of go above it. There's no, one thing that's not happening here is something where the market really gets heated into this and then you see some type of a shift. That's not happening. So that's certainly continuing to have me leaning on the bull side of things here in NASDAQ this morning. What's gold doing? Did we miss it? Did it finally drop without us? No, look at that. Yeah. Good call there, not going for another attempt in that market. I know we really timed up those first two entries really nicely and took good scales. But man, what a little chop fest here. It's kind of like NASDAQ was around the open. Just no bueno. I think that gold got content with just the quick reversion to yesterday's most traded prices rather than looking for more. Yeah, Kendrum, you could say some of that is true. Certainly that monthly reference, also the yearly, just as I talked about earlier. Go back and watch the recording of that. That's absolutely the reason for the upward directional bias. Time acceptance, great question. We don't have it yet. Even intraday, I wouldn't call it time acceptance. You really want to treat references like this as areas, not lines. So if it's going to be time acceptance, it better be pretty darn clear that it is above kind of the reference. All right, C period has started, the third 30-minute period of the session. I would love to scalp this thing long right here, right now. Not going to do it. So sorry for the coughing. I'm literally like battling not coughing every moment of every day right now. Yeah, I tried the long twice. I tried it first right here, and then I tried it again somewhere else. We could turn on the fills. Right here and right there. Unfortunately, scratched out of it. As you can see, there was a real lack of buying. That didn't come in until just after I got out. They kind of, sellers pushed one more time, and then the buying came in. Unfortunately, I had scratched out. I really do like this just as a scalp here. I'm not going to lose much if I'm wrong. Kind of demanding some momentum. Start peeling out of this thing. Just it took a look above those little tweezer top highs and then started to kind of retrace. So like I said, the demand for this trade was kind of good direct momentum. Let's go run some stops higher. Not great highs on the session. Go again for that momentum, adding back to the position. I'm not sure what's going on with my expectations for price movement or the lack of kind of sharper follow through in some of these areas where we've been seeing that. Again, that kind of calibration discussion we had earlier. I got to come out of this. Couple different ways I'll add to positions. Some that, like you just saw right there, just a very momentum based. It needs to kind of go or I'm going to be right out. Just, a handful of ticks of risk. Or the other is when I'm in a position, I've been in a position, I've scaled out, I'm really, it's really working in my favor over a substantial period of time, right? Then I almost get like a new setup where if I wasn't already in, I would likely be taking a trade. That's kind of another spot where I like to add, treating each with its kind of own risk and own stop, treating the ad totally separate and independent from the core position. Finger on the trigger here to try once more for the stop run to highs. Good bit of selling came in as we touched those highs. I'll have to be careful here. I'll scratch it super quick. There we go. Out of half of it. Little stall here. It's either going to give us another pop or we'll flatten out. Came out of another. Just a scalp here, just a stop run. Again, you got plenty of time. I'm not flatten right there. Sellers coming in after we take out all those highs. Beautifully done. So real quick, because I'm sure there's a little bit of confusion. This trade, the hypo of breaking and really holding above here and pulling back to this area to then look for longs, is not what I just did. All I did right there was a very short term. I see an area where I think some people are trapped, and I hunt some stops and kind of get some momentum adds, as you saw. That's a totally different, that's like our scalper course type stuff versus the Nadro setup, which has yet to happen. Nadro stuff gave me the bullish directional bias off the open. But yeah, just so we're clear, very different types of trading there. I tend to do kind of both depending on what I'm seeing. Yeah. Double tops are not bearish. Let's check on gold. Yep. Let's take a look at our fills. What do we do there? Short, scratch, back in real quick. Scaled, came out, stopped. Back in short, scaled, scratch. Kind of been the story of the day. I like being hands off in gold at this point. The whole setup it's just not really there at this point. It's more of a market that said we can't accept into yesterday's balance, right? We really tried here, and here's the point at which there's the retest, there's the potential hold inside of balance and range to really go push the other side and really go push the lower edge of weekly value, and it's not happening. So hands off, we're hands off in gold. The setup's not there. I think my thoughts on ES are like exactly the same as NQ. Bullish off of yesterday's lows. Yesterday's lows are vulnerable to a small stop run, but you've pretty much got kind of a very, very similar situation. Excuse me. Thinking Man says, thoughts on frameworks for DLL, daily profit targets, and give back rules. This is stuff that really matters. So good on you asking questions like this. I'll start with the middle one there. Daily profit targets. I am not a fan. That setting a daily goal of P&L leads to very bad behavior. If you go play a sport, you do not set the score that you want to have. Sure, if you're a runner, you might have your PR and you might be trying to beat it. That's you just trying to be your best and best yourself. That's great, and there's room for that in trading as well. You can celebrate having a best day ever like I recently did. You can celebrate and set goals of, I really want to accomplish this year in terms of outcomes. You can do those things big picture. But when it comes time to play the game, when it comes time to sit down at the desk and go to work, we are not to be focused on the scoreboard. We are not to be focused on the score that we want to have. You need to be enthralled in your process, being checklist driven, being motivated to trade well, however you define what trading well looks like. Setting daily process goals. Here's what I want to do well today. Here's what I want to get better at. These are the things that drive performance, whether it's sports or trading. Any elite performance activity is like this. Think back to the old the Olympics, Michael Phelps swimming, and remember the guy that was in the lane next to him? Michael Phelps was focused on doing what he needed to do, and the guy in the lane next to him, remember that picture where he was turned and looking at him, focused on what Michael was doing? Don't be that guy. So, not a fan of profit targets for a day. Look, different days have different levels of what's opportunity sets and what's available to you. Some days, like so far today, by the way, for me, like, yeah, you know, we could have caught more of this move if we could have hung in from the open, sure. But really, some days are lower opportunity. So you're going to be short of that profit target, and that's going to lead to you being upset. You don't want to be upset. That's cognitive dissonance. That leads to you not losing your objectivity. You can't see the truth anymore. So you start doing stupid stuff. And then you realize after the fact, oh, that was really stupid. That's because of the cognitive dissonance you created for yourself by the reality of the not matching up with that profit target that you had in mind. Don't do it. Daily loss limits, on the other hand, that's just part of our job. We can't have unlimited risk each day. I don't have unlimited risk. No traders on my desk have unlimited risk. Everyone has a limit, and that can grow with you over time, as it should. You should be expanding your risk-taking ability as you improve and show consistency and performance. But a daily loss limit, it needs to begin with what's kind of that risk of ruin, right? That's where if you're trading for a prop, but you have a risk of ruin, here's how much leash we'll give you before you lose your seat, right? Most pro kind of trading, investment, portfolio manager jobs are like that, right? So start there and then break it up, almost like, I love poker. How many big blinds do you have in your chip stack, right? And you want to give yourself if you show up to the table at a $5, $10 limit game or whatever, it's like the blinds are $5, $10, and you show up with $25 to the table, you don't have a chance. You can't sustain just handling the blinds and the antes to play the game. So when it comes to trading, you want to give yourself plenty of chances, a runway to be able to draw down a little bit, to be able to lose a little bit without getting too uncomfortable and getting close to that risk of ruin. So that's step one. Figure that out. And then think about yourself as a style. How many trades per day do you need to do what you do? So then you should have some idea of a daily loss limit in terms of dollars. And then you should have an idea of how many trades per day that you need. Then you divide the two, and that is what we call your R value. That's how much we want you to risk per trade. So if you got $1,000 daily loss limit and you want to give yourself 5 trades a day to be able to go give yourself a shot at being successful, well, there you are. You got a $200 R value. That's your job now. When you put on a trade, you should risk $200. If you risked $400 on a trade, that's a mistake. If you put a trade on, it was wildly successful, but you only actually risked $100 to your stop, you made a mistake. You under-risked. All my traders, I have them target an R value per trade, and that's part of their job. So I love the question. Well, I feel like there was maybe another part to it. Let me go back and find it. Give back rule was the final component. Me personally, a lot of my very best days have turned into my worst days in the same day. I'm not proud of it, but that's a part of who I am. If I start having that really, really fantastic day, and then all of a sudden I start giving back more and more, and then I get frustrated because I want to get back to where I was with that really good day. It's just part of my psychology, and it's not great. So you have to protect yourself with a give back rule. Another thing, a part of my psychology is as I make more and more and more throughout a session, I actually get more risk averse. I actually want to start maybe holding on to those profits. And so there's this weird tug of war going on inside me where maybe conditions are good. I know I should keep trading. I don't want to give back my P&L. And then if I do start to give back the P&L, then I get frustrated, right? I think a lot of people could relate to a lot of what I'm talking about here. A give back rule allows you to have the best of both worlds. It allows you to structure a part of your risk plan so that if a certain profitability threshold is achieved, not that that's the goal, but if it's achieved in a session, upon closed P&L, not open P&L, closed P&L, let's say you cross that $2,000 for the session. You have a $1,000 DLL. You cross 2x your DLL for the session. Boom, you're up 2,000. You would then say, all right, I'm willing to give back 50% of my day. I'm willing to keep trading. I'm seeing the market well. I'm having a really good day. Now I have my give back rule that's implemented, and I'll keep trading, but I'm only going to risk, half of what I'm up for the session. And then that's my new daily loss limit. I walk away, call it a good day, kept swinging. That's great. Great question. Thank you. Thank you for asking. You got it. Well, I used to have the privilege of sitting down in person with Dr. Steenbarger once a week, and him reviewing my stats and hearing what problems I was having and all those kind of things. So Dr. Brett Steenbarger certainly had the biggest impact on me, in terms of performance, psychology, things like that. Mark Douglas, someone who I never had the privilege of meeting. He's not alive anymore, but Mark Douglas, Trading in the Zone, is certainly one of the most impactful trader psychology books, and really molded a lot of what I teach to people this day about what trading is, about embracing randomness, those type things. I didn't care for his other books so much, quite frankly, but Trading in the Zone is just, that's the real deal right there. All right, so here in E period, we've got kind of this new high that we've pressed. To me, the potential afternoon trade is potentially setting up. It's probably going to take another hour, half hour, but markets don't just do these things on a dime. Sometimes looking at kind of especially someone like me who's so volume based, sometimes getting that time bar perspective can be good and slow you down a little bit and say, this thing needs to marinate a little bit. It needs to set up. It needs to, unfortunately, sometimes markets need time to do things. And if you look at something like a 3-minute chart or a 30-minute chart or something, sometimes it can give you a little bit of a fresh perspective versus just the pure smoothed out kind of volume look, which I think is fantastic. But again, you can get the best of both worlds. Obviously, if some headline hits, something happens, Trump tweet, whatever it is, and we swiftly break back down and kind of reject this new kind of acceptance into this area, and we were to trade down to 19190s or something like that, now we're in really no man's land where we've had the key rejection off the lows. We've made it to kind of the first upper inflection, taken a peak, and then failed back inside. So I would be scalp short biased at that point, just going with what is, looking to kind of take advantage of that short-term shift, but otherwise still bigger picture bullish. I'd rather see the grind up continue. To me, that's an easier trade here if we can get this hold in some type of really nice pullback above this zone. What about, I guess I haven't talked about the upside. So 18,600, 18,700 are all really good spots. We could even throw in this guy right here, the upper edge of this distribution. And then you start to get up into this, closer to 18,700 to take out this one.
Great job, Merritt.
Hey, thanks. Jimmy Cags.
I got to say, man, there was a masterclass in like an uptrend, finding a place to get long, and a downtrend, finding a place to get short. It's a really hard thing to master especially when you first start, because your bias says no, it's not going to keep going higher. And so that was a great example of doing that, man.
Thanks, brother. Thank you.
For sure. The other thing that I thought was right on point. You talked about setting daily profit target amounts. I was a commodity broker for 20 years, talking to traders around the world, 20 years, 10 hours a day. And I don't know how many times people have said to me, "Oh, Jim, my daily objective was $400. I was up $375, and I went for that last trade, and I lost it all." It happens all the time.
It leads to disaligned motivations for putting on a trade. You put on a trade because you want to achieve the goal versus you put on a trade because there's a really good trade for you to take. It gets you way out of whack. So that's yeah, absolutely. You've seen it firsthand, it sounds like.
Oh, time and time again. I mean, it's I'm like, no. Just close your computer and go to Starbucks, walk the dog, do something else.
Yeah.
Oh man. Anyway, so great job. I'm glad you're feeling better. You sound way better, man.
Thank you. Yeah, feeling much better.
Very good. We have that the same comfort movie in the background. I know I lost my video. I'll be back in a second. And that's Harry
Caddyshack?
Potter.
Harry Potter. Okay.
Nice. My wife watches this all of the time. Crazy. So I've seen it probably, I don't know, 7,000 times. But let's see if I get my camera back here really fast. My camera's still not cooperating. In any event, well, we're going to do this in the blind, I think. Any last second thoughts, Merritt?
I just want to say hey to Stowe. What's up, Stowe?
Hey, whoa, I'm on. Oh, I didn't know they put me on the thing. Hey, Merritt. Nice to meet you, man. How are you?
Likewise, brother. I'm good. Didn't catch too much today, but gave it my best, and can't catch them all, man. But I'm looking for. I'll hang up and listen to you trade. I always love it, dude.
Awesome. Thanks, man. Yeah, we're gonna try to, we're gonna try to keep riding this thing as long as they'll let us.
Let's do it.
You kind of talked about the exact playbook that I was looking at. So yeah, we're gonna ride it, and then we'll scalp short if they want to give it up. So,
well, I tell you what, when Merritt Black and Stowe have this lined up analysis, that's just mega confluence. You just can't miss. 60% of the time, that thing's working every time. That's guaranteed.
That's true. That's true.
See y'all. Take care.
Thanks, man. Did you break your camera, Jim, again? Yep. All right. Thanks, Jim. Hey, everybody. Good morning. Good morning, chat. Oh, that was so cool. Yeah, I've never got to meet or talk to Merritt before, so that's awesome. He had a lot of great stuff to say about how to manage, your emotions and money throughout the day. Love the poker analogy. Just like he said, you can't really sit down with less than 100 big blinds. So you got to put yourself in a position to succeed. Yeah. So let's get into what we're trading at the moment. So this is a pretty clear trend day, just like we fell into yesterday, except this is a trend up instead of a trend down, which is good for me. I trade those a little better. Right now, I'm leaning on the week open. Now that we're above it, I'm just scalp. I got some longs in here, took some profit, and we are just gonna try to ride this up as long as we can. I'll zoom in here for a second before I talk about the whole day, just to show this this 330 spot that got pretty wild a second ago, and yeah, there were like almost 600 lots lifted just in this section. Big passive seller is now been defeated, so buyers still being rewarded, which is what we want to see for continuation. So that's cool. Let's go back and we'll talk about how I approached the day going into this. So overnight was very interesting. Obviously a giant. Let me compress this a little bit so you can see. Here's our overnight session. Started back here. Obviously, some pretty bullish action until we got to this green spot again, which is the European 30-second opening range. I thought it was interesting again that they seemed to just sell it. They had no interest in buying it. It got a quick retest here at 9 Eastern before the open. And so but the whole overnight session was, it looked like it was long. And as soon as this zone gave up, that's when we got the trend start. And so this is just another example of how I use this as just like kind of like a pivot, just to give an idea of overnight positioning. Long above it, it seems like the move. So I was able to ride this up to the weekly open, which is this green line here, 305. And yeah, now we're just trying to play what's in front of us, which looks like some grindy long action. In scenarios like this, I don't really have a higher time frame target here, so I'm just going to ride it until this VWAP band gives up, this slope changes. But yeah, it could be could just be a long grindy day of adding, taking off, adding, taking off, and that's cool with me. These are my chill days. These are my bread and butter days. So I'll just sit here and relax and hang out with you guys. Yes, Fatfish. It is like yesterday in reverse. That's what the market likes to do. It likes to get weird like that. That's why I like it. I respect it, I love buying the top. I love buying highs and selling higher. That's my jam. Yep. Also, before I forget, we are doing a giveaway on Twitter or on X, sorry, for 1 free month of access to the Order Flow Labs NinjaTrader tools. And they're going to be 3 of those given out. So there will be 3 winners. All you have to do to enter is just go to my Twitter, X, whatever, and find that tweet and just do a quote tweet of it and tell us what your why is. Like, why do you trade? What got you into trading? Why do you love trading? Any of those are valid answers. And then tune in on Thursday to the whatever we're calling this, Trades with Stowe. Get stoked. I don't know. But yeah, tune in Thursday at 11 and I'll announce the winners then and we'll get you set up. So 3 of you folks can take this for a spin and start to use the stuff that we've been showing you all day. My Twitter is at ThetaStow42. Theta like the Greek. Oh, thank you. Thank you, NinjaTrader person. All right. Let's go to the chat and see how everybody is doing. Did everybody have a good trade today? Everybody catch this trend and stay along with it? I know it's hard. It's hard especially post a trend down day to be able to reverse your bias like that. It takes a lot of practice to come into every day with a blank slate and, just ready to accept what the market's going to give you. But I don't know. It's good to have a short memory. That's also why I don't look at much high time frame stuff, just because it triggers me into getting big ideas. Does anyone ever tell me that I have a JC Carver poker vibe? No. I actually don't know who that is either. I watch a lot of poker streams too. I'll have to check him. I'll write that down. JC Carver poker. Cool. I got really into this last winter for my winter hobby. I wanted to get better at playing Omaha. I've always just been a no limit player, but decided to try to get good at Omaha. So me and Leo would spend a lot of nights just streaming online Omaha and hanging out. So I watched a lot of poker streams just to figure out how Omaha works. All right. Yeah, fly it here. Yes, I sold my NQ and put 2 MNQ on to run. That's awesome. I did that yesterday with that short that we got in. I ended up getting a mini on an ad and then let it run and then it came back on me. Leo bottom ticked ES, and then that was that was the bottom for the day. I should have just sold then. Lewis, I play cash mostly. I don't really care for. I do a tournament like for fun. Here in Pittsburgh, we have a. Well, I don't really go anymore once I moved, but I used to live really close to the casino, and it's a really small room, but it's nice, and it's more like it plays more like a really big home game with like 200 or so regs that just hang out. So mostly just play cash because it's more. I don't know. You get to reset every hand. You're less worried about your working with the tournament R. Also, tournaments are such a crapshoot. You can have like a 5% win rate, and that's good, and that's it's very low for me and my and the way I like to play. So yeah, I just like to grind some cash. That fish got long after the open. Taking trap shorts now. Yeah, I don't. Just like with yesterday, I don't take shorts here, and I don't know if you remember what we were talking about when we saw that continuation short play out, but it's happening in reverse now. So what we're seeing here is this is offer delta coming in, and then this is bid delta absorbing behind it. So it's being supported. The move is continued to be supported. Also, delta map is this bright blue. That's the most extreme color for delta map. So that's why we continue to ride this out. And it's just building and pushing too. I mean, if you look at the whole volume profile, once we got above the overnight high, it was build, push, build, push. This was a little inflection point back here for a second. I thought maybe this was going to retrace back to the opening range right in here, but these folks came in and saved it. Those bids got rewarded, and then it's just been push and build ever since. Like, this is impressive. They're still buying it right here. But, sometimes you got to buy the top. Oh, you're taking the trap shorts money. Nice. Good. That's better. Deriv Trader, the European Open is 3 a.m. Eastern time. It's also important to remember like daylight savings time messes with that too. So at some point you got to change it to 2 a.m. Eastern. But I think we're out of that at the moment. Yeah, EH. I like to. So pullbacks exist, right? We all know that. The way I try to think about a pullback, if the market is trending, is I'm not trying to trade it. You know, it's still good information to have, but the pullback is going to be the lesser of the two moves if it is a true trend. And you know, all the signs are there for me right now that this is a true trend. I mean, look at this slope. It's like a 45-degree angle on this on the upper VWAP band. So this is like prime trend time. And that doesn't mean it can't pull back, but I use the pullback more as like a sign of healthy trend. And this is more of a healthy trend than we've seen recently, especially up. Most of the long moves have been like extremely violent and squeezy. This is more of a stair step. You know, it contains some healthy pullbacks. It contains like an auction. You know, that's what you got to think about. So instead of trying to trade the pullback, I just like to watch it to see if it, you know, is a proper pullback, and maybe that's an opportunity to add to my entry. Yeah. Is Orderflow Labs a course? Does it explain setups? Orderflow Labs is not a course. There are many trade setups inside of the Discord, shared by members, shared by moderators. Many good traders in there that are not moderators, that are just, you know, good traders that have shared how they use the tools and look for their specific setups. A lot of the way, like I've been sharing here. But no, it's not a course. There are many. That was a big sweep. That's cool. There is an extensive knowledge base in there also about all of the tools and how to use them, how to calibrate them, different ways that you can make them your own, stuff like that. So, but no, it's not a course. Shabani, explain the reason why you took this trade. This is a pretty clear long continuation trade for me. It pulled back to the weekly open, which is a significant pivot for me that I use. I don't know why, but it's a really good pivot. And you know, I saw the bid being supported down here at 306. Also, we are in this upper standard deviation VWAP band. I'll zoom out a little bit so you can see the structure of the whole thing. It's just a big day, so it gets a little squished. But yeah, this is +1 and +2. And when we're living in this zone, I don't short. I don't enter any shorts at all. Don't care to short. Shorts can work up here, but that's just part of my rules. Keeps me out of trouble when I listen to my rules. This is the RTH VWAP itself. And then here's the bottom band too, like a million miles away. So I like to trade momentum trades when they're in front of me, especially long momentum trades. Hopefully I'll be in this thing all the way until the afternoon show. But yeah, I don't know. That would be funny if they let me hold it all day. There's a big 500 buy on ES. No, I don't. Yeah, I don't really pay attention to resting orders too much, especially on ES. Other than just for fun, it's cool because it's cool to see. I mean, we're watching a pretty big battle up here right now. So let me get zoomed in so you can see the delta. This is a good, this is a great auction right here. Buyers, sellers. Somebody's trying to decide if this is too expensive or it's not expensive enough. And, we'll get to see who wins. That's all the game really is. It's just watching those participants and trying to find a place to get in that's, you know, relatively valuable. So yep. So this was all a reason why I was in this trade. This is a piece of MGI that I use. This is which, you know, you need a level to lean on. And then I saw the market activity that I wanted inside of the day type that I like. So yeah, press green button. Simple. It was simple when you don't make it complicated. Doesn't it look like it's due for a pullback? Yeah, that's what the market looks like before it rips your face off and goes up. I don't think anything is ever due for a pullback. Jim said it before. Merritt said it before. Like, it can keep going, man. Like, there's no rules. Any sort of idea that you try to have about like what it looks like it should do, that's just setting yourself up to be, you know, offsides. The market is the only thing that knows what it's going to do. It's right no matter where it goes. So the only thing you can do is react to what's actually happening. And that's why I try to be more reactive than predictive. When I'm playing my best game, I'm extremely reactive, zero predictive. Delta volume profile. How do I, Grisha asks, how do I set this up so it's calculating leg to leg? That's just part of the Order Flow Labs studies on the Delta profile. So when you go into the indicator, you can set it, calculate leg to leg, and then you set it to the point value of the rotation that you'd like to see. This is at 60, but you can make it smaller, larger, depending on your time frame that you want to look at. Pillar asked me, how long did it take it to be where you are now, Stowe? I don't know what you mean, really. Like as a trader? I mean, I've been doing it for 4 years, obsessively every day for sometimes all night, all day, all night, all day, especially in the early days, just figuring out, you know, what this game is, what it means. So it's taken a long time, and like I'm not even close to being really, really good, which is the goal. So, you know, I assume it's going to take decades, and you just got to try to stay in the game long enough to get good. JV, the Order Flow Discord, Order Flow Labs Discord is private, but there is a if you just want to check out the Discord, there is a Discord only subscription that's pretty cheap, and you can just jump in there and check it out for a month, and you know see what the community's like, see what the interactions are like, and you know decide if you like it from there. Blind Man asks, aren't the red trapped buyers? No. So, I mean, they're only trapped if they're wrong, and currently they're not. So the way I look at this is offer delta that is being rewarded. So these are bids that are I'm sorry, this is bid delta that's being rewarded. So these are people crossing the spread into bids and price not going down. So when I see red up here like this being supportive, that is buyers supporting that move. Now we see it's coming back down into it and testing it again. That could have been an exhaustive pop, and maybe this is our pullback that we've been looking for. We'll see. Me. Man, I forgot to turn my music on yesterday, and I was like, oh no. I felt like I was in the cone of silence. No, today's a much better day. I got my jams. Got my jams back. So we're just watching this little this little node that they've made here. I'll watch this 360 and see if this is a pullback down into that. Looks pretty good. I mean, sometimes the pullback is a pullback for ants. I don't really want to add there. I'll wait for a little lower. I'll just let it run, I think. I think that's my... I think that's what I'm going to do. Dex. Yeah. When the market grinds down, you're good at shorting, but you just struggle with the opposite scenario. So we're opposite people. We're very opposite people. I am extremely comfortable with the grind up, really uncomfortable with the grind down. I just have a lot of past trauma of trying to ride the grind down and then getting squeezed to death. So I find being long into grinds is much easier than being short into a grindy day. But it's probably just a practice thing. I probably just have more repetition on these kind of days than I do the short days. Trying to read the chat here. Con, you're only up 180 bucks. That's a lot of money. You can get a lot of stuff for 180 bucks. What can you get for 180 bucks? That's like 18 Jersey Mike subs. Think about that. I've been thinking about sandwiches all day. I'm not no affiliation with Jersey Mike's, but I'm definitely going to buy one when the stream is over. That's my plan. Hey, Tracy. Oh, thank you. JS, my favorite 3 bands. I really like only 3. I really like Jason Isbell. I mostly listen to folk country music, especially while I'm trading, just because it's nice and chill. I really like Jason Isbell a lot. I really like John Moreland. He's a really great songwriter. I'm listening to this woman called Ken Portnoy right now. I think it's Portnoy. Ken something. Pomeroy. I'm sorry. Ken Pomeroy. Also a great songwriter. Full tilt. I'm trading the close today with XY. So double stow today. That's the plan. I'm trying to keep this trade alive all day just to see if we can run it. Yes, thank you, Omni. Portnoy is the pizza review guy, not the female folk singer. That's funny. Fly it there. I'm using 750 volume candles for my time frame. So if this does get a pullback, got to look at it like stairs. I'd like to see this at least pull back to here. If not here. But this node would be ideal for an ad. This 335 to 340 spot. I mean, we'll see what happens. Europe closes in 4 minutes, and I'm not seeing any signs of profit taking. Yeah, it's just the grind continues. We're just in this auction up here right now. Do I ever close a trade before the euro close jiggle to avoid the profit taking? Nah, it's not that wiggly. It's not like the mock algo. It's like a mock algo for ants at the euro close. Plus, I got a lot of space on this trade. You know, I'm 70 points in. It's well paid for. I took a lot of profit. I moved back to minis today too, just because this is a day I'm extremely comfortable with, and usually pretty slow. If this is going to be a grind up trend day, it's going to be, you know, that frustratingly slow grind. So I'm happy to put a mini on and take my time. Patience, 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 patience. Shabani, I do have the delta is compressed to 9 ticks, 9 tick compression. I personally run a little. If I was just trading by myself and not in front of people that needed to look at my screen, I would have it much lower. But just so you know, you can see the numbers on. I mean, even then, it's kind of hard to see at 9. But I have it blown up just so you can see the values yourself if you'd like. I'm an NQ purist. I don't like to compress anything. I'm just an animal. Just like to trade it. Two minutes, these single prints will be confirmed too. Got single prints from 338 to 306. You got 8 ticks? Okay, cool. So yeah, same theory. We're close. Jeff, the end of the day is M period because in I don't know, in auction market theory or in just TPO world in general, each 30-minute period of the RTH session gets a letter. So the last 30 minutes is just M because that's the last letter we get to. So 9:30 to 10 Eastern time is A period, B period, next 30 minutes, C period, next 30 minutes. And we mostly just say that to be cool too. It's important to have some lingo. You got to be cool. That's why people say stuff like, I'm on the 352 and a halves. I think Merritt brought that up the other day. If you if you want to sound a little too much like you're in the biz, that's what you say. Hey, Chris, what's up? Nice. Me and Chris trade a lot of the same stuff. I have noticed that. We are often aligned. And Merritt too today too. I pulled up the stream and I was like, yep. We're all on it today, so that's a good sign. All right, there's the close, and now we're down here at this node. Touching this guy. Let's see how we react here. Let's see the offer come in here. See if they get stomped on. I need to see some bids on the tape. There we go. Cool. So I got an ad there. Market in not great, 344, but that's fine. I'll try to get back up here to test these lows. And we'll take that profit there at 57. Yeah. We'll see. If we fall out of this, I'm just going to cut the whole thing and then reassess. It's getting a little violent. Yeah, I'm going to stay on this. Finger on the flatten button. Yeah, it's wiggling. It's jiggling. We're trying to figure it out. Hmm. I mean, it's pretty responsive. Need some bids to stack here. But yes, I'm just watching for that to hold, or if they're going to press down into it. Now, so we've lost this. Where my crosshairs back here? We've lost this volume node here. We're holding this little node. This might need to test the other side and then go. But this offer stepped in here fine. So, you know, it's a good ad. If it doesn't work, it doesn't work. Oh, there we go. Cool. So that's our ad. Now we will tighten that baby right up. So I just grabbed another 10 points off of this. And now I just consider this a new trade. So we closed this long from 305, close that out here at 56. That's 50 points. That's great on a mini. That's plenty for me. So now I'm ready to hold this tight. If this wants to continue going, if that was our pullback, that's great. If not, you know, we'll let this get stopped out and we'll reassess with new information. Panda, the spaces between the candles is because I'm running a second data instance of MNQ on the same chart. And I haven't been able to figure out how to properly format those candles so that they line up perfectly. And I don't want to run two volume-based instances at the same time. That would be how I could do it if they were both on 750 vol candles. But I mean, even then, the candles are going to be different. It's just something about what Ninja does. When you hide one instance, it still allows for the space, even though those candles are set to be transparent. I know it looks a little goofy, but it is what it is. Okay, Con, go short. I don't hate it. I don't hate the short. You can see we retested this. I put my take profit right at these lows that it was being supported by, and it rejected. So I don't know. Sorry, let me get so you can see. Yeah, we're still just poking around down here, so we could fall out of this thing, and that would be great. I would love it to pull back, so we could get a real trade on. There you go. Con got the short. Okay, so we're stopped there. Flat. See if anybody is home here. As a rule, I don't buy the point of control. Just because I can't really bring myself to do it, especially if it's already been, an hour into the day. I don't like to mess around in value. It's not to say that you shouldn't, but Con, good short, bud. Nice. That was cool. Jeff, do I ever filter the size of the time and sales to filter out the ones and the twos? No. I'm more looking at the flashes. I'm not really reading quantities. I'm just looking at those the market buys and sells. Really, it's just off in the corner on my peripheral, like shouting at me when it's doing its thing. So. Yeah, coach. Take profit is when you make money, and they let you have it. Then you can buy sandwiches with it and other things. Oh, Patty Lou's using the free tools. That's awesome. That's great. It makes me so happy that you folks are getting into the OFL tools and experiencing them. I am really passionate about them, and I always have been because they really turned my trading around, and they just were that visual thing that I needed to be able to, because I'm super visually reactive. I learn best when I'm seeing something as a visual. So it's been the best tool I've ever found. Fatfish does, yeah. Who owns Jersey Mike's? Maybe I should. I don't really invest in anything, but maybe I should figure out who owns Jersey Mike's. Suresh, the tool, you can just go to orderflowlabs.com and sign up for the freemium. You can sign up for the Discord only. Or here's another reminder about that contest. If you go to my Twitter, X, I'm never going to be able to do that, am I? I'm never going to not call it Twitter. But if you go to at ThetaStow42 on Twitter, we're doing a contest and we're giving away 1 month free to 3 people. All you have to do is just quote tweet that and tell us why you trade. Nice. So if you guys just saw that, this delta just reset. So that's our new rotation that's triggered there. This rotation from 90, 27. So now we're getting new delta info. We're on a new leg. New page is turned. Yeah, I use the anchored VWAP frequently. That's a free tool. Julian, the delta resets I have it set to every 60-point rotation. You can set it however you would like, but I'm using 60 points at the moment. When, a couple weeks ago when NQ had like 1,000-point range days, I had that doubled. I pretty much just doubled everything. I doubled the stop, doubled rotation sizes, doubled all that stuff. So I do want to watch this weekly open and see if we get another reaction here. We got all these guys. So this could be our pullback here. Like I've mentioned a million times, I don't like to mess with the IB. It's too crowded of a place. I don't like crowds. I like to just chill and find execution spots somewhere else. So I will let this go down here and fight for a while and then come back up, and then I'll get back in there. See if we can get another trade on. Decker Chiro. What are the bars on the right of the chart called in the indicator settings? So this is a delta volume profile is what it's called in the order flow labs tools. It's called lots of other things, delta add price, delta buy price. But yeah, this is when you set up the order flow lab suite, it's in there under volume profile, and you can set it to show both a volume profile and a delta volume profile, or just one or the other. And that's what I have here. So I actually have two of that same study running. Here's the volume profile over here, which is the full RTH session. And then this, like I just explained, is the one that this is the delta volume profile resets every 60 points. Con, what a trade. Wonder if Leo's in this trade. He likes to do that. That was a very Leo trade, that little puke. Be nice to run these stops here. So now that we're out of that upper band, and we can see the slope is changing also. This is rounding out. I'm really not trying to initiate anything until we're at least down here. Yeah, I'm going to need to see some pretty serious exhaustive signal. Or if we get back above IBH, then I can maybe get in down here. Yeah, Coach, I've got the Dominator on there. It fires sometimes. I think. I did have it. No, I must have taken it off when I rebuilt the thing. Yes, I use the Dominator. I use many instances of that on many different volume timeframes as Confluence. So we're running those stops there. You need a big boy to show up. I'm still not going to get in. Hands off. Trying to follow my own rules. This is when it's helpful to be in front of all of you. Because I said I wasn't going to get in, so there's no reason to force it. So I'm just going to sit here and be patient and watch for an actual good entry on the right side of the V. Maybe a dumb question, but with volume charts, how does time work? I mean, time still flows in a linear fashion normally. No, I'm just kidding. Yeah, it's just they're just not time based. So every bar is 750 total volume. So the way it helps me is the speed of the bars is kind of a good way to gauge like the volume that is coming into the market at that time. So it becomes like a pattern recognition thing in a way where you're like, oh, these candles are going fast. Oh, these candles are going slow. And you can feel, this is where the vibes come in. You get the vibey feeling. And we joke about vibes, but like that's what it is. You're just feeling out, the market action, the market pulse. Merritt calls it something else. It's also very good. It's not flow. I don't remember. But Merritt has a good explanation of this too, about like getting into the market vibe for the day. Rhythm. Yes, rhythm. Thank you. Dallin. Yeah, it's the R. Yes, it's the R. You done, Leo? Did you get that short? Can I get back in now? All right, so we got a delta flip. I still want to be above this this weekly open. So I'm still going to wait. But this is an exhaustive sign. I mean, we came down and tested this again. What time is it? 11:47. So I've got yeah, I still don't want to get in there. Yeah, so if this this offered delta here, so what happened is we drove down into this. This is a bunch of bid delta, and then we got a delta flip on this candle here. When we got back to the weekly open in the high BH, this offered delta absorbed, and it seems like it still wants to press lower. So, yeah, nope, still good. What does a failed upside auction look like? Well, you normally don't know until after it's failed. So it's I don't want to I don't want you to try to predict what one looks like in advance. But yeah, it just looks like this. This is offer delta, and buyers tried to buy, couldn't get through it, and then it sold off from there. So more sellers than buyers up here. We were auctioning this for forever. This was 11:05 to so we spent 20 minutes on this volume node right here. Sellers, buyers fighting, and then sellers won. It even got a very clean retest here, which is also why I put that scalp take profit there too. Sometimes when those nodes get retested, they'll get rejected off of that. So I don't short that because that's a rule just for me. But Con took that trade, got in short, smashed it. Great trade. Yeah, R is for vibes. Could be Vadro. I could ask Merritt if we could change it to Vadro. Larry, do I put any confidence in heat maps? Do you mean like bookmap? I don't really like to ponder what resting orders are up to in general. I'm going to try to get a little weird with this limit ad and see if I can get in. If I can't, that's fine. But so what just happened here? These buyers won this. So let's see if we can get back here and get filled on this limit in this node. Might just run without me, which is also fine. Oh yeah, now it's partying. Sometimes it leaves without you. I was also answering a question. The I mean, heat maps are cool if it helps you. If anything helps you, it's cool. There's so many different tools to use in trading, and some of them are going to click for some people, and others aren't. So, just find whatever vibes with you and makes you a better trader. That would be my advice with that stuff. That is a delta volume profile, Gennaro. No, this blue bar, Carlos, is this what you're talking about? That's not support. That's just the point of control. That's where the most trades have been transacted in the entire volume profile today. That's the center of it. If you zoom out and look at this whole thing on the right, that's the whole RTH volume profile. It's pretty ugly, but by the end of the day, they'll fill the stuff in. I'll come back at 2:30, and this will probably look a lot cleaner. But that's a trendy volume profile too. Lots of pushes, lots of builds, lots of gaps in between.
Stowe.
Hey, Jim. How's it going?
Good job. Good job today, man.
Thank you, sir. Thank you, sir.
Pretty good. Pretty
Pretty
good.
good.
You're doing double duty today, right?
That's right. Yep. Double stow day today, double stow day on Thursday too. So I don't know. We'll see. We'll see when they get sick of me.
No, never. So how do you let me ask you this question
Sure.
before I transition. This time frame, this 11 o'clock time frame, how are you liking the actually live trading during this time frame?
Oh, I love it. This is much more comfortable than the afternoon for me personally. Because this is when I'm actually used to trading. I normally try to get it off the desk by 1 if I can. Not that trading the close hasn't been a good exercise because it's been fun to find new setups, but yeah, this is my wheelhouse right here.
Well, yeah, which is amazing for you to say that out loud because you've been on fire at the close lately. So I don't know, man.
Blind squirrel. You know how it goes.
You might be able to sleep in from now on and just wake up around,
Dude,
2 o'clock.
That kid wakes up at 6 every morning. There's no sleeping in for Stowe ever again. Maybe another 14 years. That's what my wife and we joke about. We're like, I wonder when she's gonna find her sleepy teenager phase. Won't that be cool? We can go back to being sleepy teenagers ourselves.
Yeah, no, they get up early, just like 60-year-old men get up early. Any event. All right, man. We will look forward to seeing you this afternoon. I'm
Yeah,
gonna
man.
go ahead and just kind of show some charts really quickly here, and then we'll break for lunch.
Sounds good. All right. See you
Thank
later,
you.
Jim.
All right, folks. What a session today, huh? Opposite of yesterday, I guess. I heard a couple people say. Let's just take a look at some of these gamma levels and some action here. This is the E-mini S&P. I have a 30-minute chart lined up right now, and interestingly enough, the volume profile here is really wonky. We've had about only 650,000 contracts have traded so far in the front month in the S&P, which is, again, a slow pace. A little bit better than yesterday, but not, we're not going to break any volume records today. But we rallied all the way up to, interestingly enough, this 0 DTE call resistance and 0 DTE gamma wall a second ago. And these are Mentor Q levels. And look at that. The official point of control is actually right there. So we had a whole bunch of volume coming in. And we haven't really sold off much below that, right? So we're trading well above the initial balance high, which was at 52.79.5. The initial balance low is pretty far away in the middle of the London initial balance as well at 52.35. That one-day max is also sitting right there. That's approximately 52.74. So we'll see if we get any kind of retracement back down. The session VWAP is just powerful. I mean, we've been trading every time we touch it, we walk along it, we rally against it, we walk along it, we rally off it, we touch it, we rally off it. So that's the story of the day today is follow that session, a volume weighted average price today on this E-mini S&P. I wouldn't be surprised if we get a touch back down to that, but the slope's pretty vigorous still, up 2.03%. Let's do the same exercise with the micro NASDAQ, and pretty similar structure here. That same 0 DTE call resistance and gamma wall is at 18,300, give or take a couple ticks. We're sitting on it right now, right? We actually traded above it quite a bit. Remember, the micro NASDAQ is a little bit more volatile, but a little more pricey, right? Price pops like a popcorn, like you're popping popcorn when that price is moving around. So not surprised to see that we kind of drove a little bit higher. We're still trading above the initial balance high, which is approximately 18,305. Initial balance low is pretty far down. We also have that same VWAP kind of formation. This is the session and volume weighted average price again. So again, buyers are in control today. The micro NASDAQ is up 2.18%. Let's just shoot over to gold. Gold has pulled back a little bit, right? Remember earlier today we had that 3,500 print, a little bit higher than 3,500 print. Call resistance was actually at 3,500 even. We sold off of that. We did close one candle above it. This is the 30-minute candle. We have one 30-minute candle above that 3,500 level. And then sellers came back in, most notably during the London initial balance, and then again during the U.S. initial balance. We have a little bit of an equal and opposite brewing right now. We are south of that 0 DTE. Again, that 0 DTE gamma wall and call resistance approximately 3430. We have not had a double break though. We haven't had any break of the initial balance yet. We'll keep an eye on this later on in the afternoon. Blind spot one, we tagged it perfectly. Menthor Q, blind spot one, 3420, and then a little bit further down is that pivot right now. So again, this is trending down a little bit, so it's going opposite of the stock index futures, which might not be that surprising today, to be honest with you. But we're nowhere near on a daily. Let's look at a daily just so I could show you. I mean, this candle is an interesting candle. Hopefully I'll talk about it with Tracy a little bit more. Possible gravestone doji in the works here for the gold, and we'll talk about what that means. Looking around the cabin here, let's just do the 10-year notes really quickly here. We have that 10-year yield at 4.376. Daily chart, we're right in the middle of the consolidation range again. Look at all the moving averages. They're going sideways right now, almost perfectly. We're kind of positioned right between that 8 EMA and the 50 EMA. We have a subtle cross under on the 8, but nothing to write home about right now. And the stochastics are just kind of, I don't know if they're going to cross under, over, or just kind of be tangled in love for a little bit. I'm just looking at some other option numbers here. We have that pivot really held as the top of the day today, that pivot level at 110 spot 29.30 seconds. And then at the bottom, another pivot level framing the conversation. And this is the S1 where we wick perfectly through it at 110.16 half. That is your edge report for the middle of the day. We had a great morning. We did a lot of work. Had a lot of great contributors here with us this morning. Fantastic day on NinjaTrader Live. We're looking forward to coming back with the Order Flow Labs guys at 2:30. Again, trading the close. These guys have been on fire. I recommend everybody pop back in here at 2:30 East Coast time. Until then, take care. See you soon.